Good morning. Sorry, I wasn't in an enthusiastic rush to get here because we're not gonna do fuck all till 2 o'clock probably. Uh, where's the goddamn? There we go. Oof. What's up, Sisyphus? IWM's getting kicked in the wiener. Gamma Max here moved up to 1056. Let's see if they run out of short liquidity. Actually, they are using quite a lot of it. VIX is holding up above 12. UVXY fell off of Reg Show yesterday for the first time since end of September. Which might be important. Looks like call buying into market open. Pretty decent interest at 46.60. Not much beyond that. And pretty defensive positioning at 46.40 and 50. So I say we're range bound within $20 here. There's a little bit of put buying coming in still. I don't think we've moved up enough for anybody to really want to take profits, but we might fill that open gap. If you really want something to do. This is a decent entry to start a rig position. I don't like that fucking company. I mean, you can fucking start a position if you want to, but I think it sucks. UVXY. That's a leveraged VIX ETF. ETN. Anybody interested in activated carbon? Apparently a huge shortage. No. No, I don't. So you're telling me Brita water filters are going to get more expensive? Is this a decent place to buy SLD positions? Could be. Nothing until 2. Let me decide if all-time highs or market correction. Yeah. How do the usual suspects look from where you sit? Everything looks like it's going to be pretty flat today. I don't see anything moving too hard. With NQ's outperforming a bit. NVIDIA broke up through the... NVIDIA's actually at the hit PT at 481. So big breakout for NVIDIA. That looks kind of good for it. Or it's a good short entry. I might have a little bit more room to run. Netflix still looks like shit, but it hasn't broken down enough for an entry. Microsoft looks fine. I don't think it's going to do much today. Meta looks kind of bullish, but the range might only be like $2. Google doesn't look so great. Failure to break 135 is pretty bad. AMD might finally be turning around. Amazon looks fine. Boring. Apple's way overpriced. Nearing its all-time high again. Pretty close. $46.60, $46.40, yeah. Why does SPX feel like if it slips at all, everything dies? Because if it slips at all, everything dies. Does that mean in T2 someone will be delivering on the VIX? T3 to T5, possibly? Yeah, if they cash settled it. Most coal will become, but mostly coal will become more expensive. Okay, that's cool. I like that. I own a bunch of BTU. Looks like bullish beyond post on Wall Street Bets got deleted. That was a close one. Yeah, that fucking last thing we need is Wall Street Bets in here ruining shit. Are you talking about UVXY off reg show yet? Yeah. Well, I just did. Would you mind talking a little bit about what you were talking about in the SPX Discord last night? Thank you. I don't know what you're talking about. I talked about a lot of things. Penis art? That was more directed at JFresh than the general public. Our special secret stack is doing another dividend tomorrow. This one's just 1%. This is like their 4th dividend this year. Awesome. I just have it on drip. Perfection. Rate cut equals road to hyperinflation. Yeah, not even like a very short road, I don't think. Longer term Nvidia puts, like 4 months. Up to you. As someone who's carried Nvidia puts for the last 12, let me tell you, it's not a fun position to manage. Sometimes it is, but sometimes it's absolutely not. GM Gork just tuning in. What's up, OG? What mean UVXY off reg show? It means that UVXY is no longer on the reg show threshold list. Still feeling good about Beyond. I am. I don't like that we're below gamma neutral. They did get quite a bit of liquidity this morning, although it appears they've used it all and not very effectively. I found a company that's winning damages against almost all the coal boilers in the U.S. for patent infringement of mercury containment. They also want to use coal ash ponds to recover REEs. Okay. You're way more interested in this than me. I can already tell. Pultsy's throwing a grift con where tickets are $500 each. Bobby bag holders are traveling en masse to Florida for an all-day event. The memes this week are about to get hotter than core. I've seen, yeah. It's really, really sad. Your shirt is on. Why? Why not? That's fuck off, Grim 2. GN on BYND this morning, 10:56. Happy SLD homewrecker. Okay, well, it's just the beginning of SLD. All right, relax. UVXY should pump eventually if they cash settle the ETF, or different rules for VIX instruments. If they cash settle it, they may go out and buy like a lot of VIX long positions. Because their NAV to their shares outstanding is super fucked, which was my first post about UVXY. When do we start making money? I don't know. Do you have anything with like dividends or income strategies that might be open? Those are usually just kind of like a consistent money draw. That way you're always making money, even when you're sleeping. What, so many Friday puts for SLD? Oh boy. Ends on Monday, you know. When are they going to start shorting GME back to 11? After the $15 calls sell off? If the $15 calls ever sell off. Fucking idiot bulls keep buying calls for 50-cent moves. But yeah, you'd hope eventually. That's what my account is for? Oh, I see. I only have one eye open. A toddler throwing up in the night. And apparently I'm too old to eat pizza before bed. How can you be too old for pizza? Everybody should have an income port. That's how you fund the degenerate shit, you know? You can make money while sleeping by never stopping the stream. It's genius. So this could both be this could be the last episode of Pickle Financial, but it just goes on forever. Like Lamb Chop Sing Along. Take a Tums. My income port is me showing up to my day job. Yeah, but who wants one of those? Yes, this is it. This is genius. I really like where your head's at, crypto. I could that could bump me up to like $400 a week in ad revenue. That's almost like a extra Wendy's position. Some people started pumping without knowing what it was, and they will keep on pumping and pumping just because. If you've got GERD, take steps to manage it. Can lead to Barrett's esophagus, which increases your risk of esophageal cancer. Yes, it can, Dork. You didn't have to go there this early in the morning, but this is true. UVIC's still on Reg Show, though. Yeah. Yeah, it is. I'm a Prazols. I'd rather just take a Tums. And then now we need to make a ticker called GERD. How many Tootie Flutie Poots should I buy? How many do you want to buy? I just got a YouTube ad asking me my experience of YouTube ads recently. What did you tell it? I can buy a Chipotle bowl every 3 months with my income port. That's a start. I found out I'm getting a generous holiday bonus of, wait for it, $500 when I make 6 figures. Are they giving people who make less than 6 figures more? Is it like a sliding scale? You say income strats are simple, but then the market does violent and blows up those income positions. You hedge them. Can only blow up half. You can relax. My second cousin had Barrett's esophagus. He had a complete esophagectomy to beat cancer. Everything he drank or went through in like 10 minutes. Real skinny. He looked sad. That sounds awful. It's not pronounced Chipotle. I should make income on Apple credit spread, and I'm down $500. I make 5 figures and get a $25 Piggly Wiggly gift card for a Christmas bonus. Cry me a river. Fair enough. Although you did choose libraries. My cousin's name is Barrett, and as far as I know, he still has his esophagus. Well, that's good. You'll be hearing from my lawyer. What's the word for midlife crisis, but for your career? I think that's what RC and I have right now. I don't know. What do you call a strangle between a $60 range using 0 DTE? Stupid. If IV increases enough that the MM flows stop, is there a possibility of a Volga Vana squeeze to the 12-15 sold positions? So it's possible that the increases in Vana as we approach expiration and volatility, spot vol rises, that the MM's hedge will kind of collapse anyway, or their need to hedge will collapse. Even if we don't get like a 2% bump in implied volatility. So something to think about. If we slip 4,600, I think things get pretty ugly. If we slip 4,550, things definitely get ugly. VIX is shorted into the dirt right now, so yeah, I mean, a large event could. Well, it's gonna force vol up. There's more shorting on the VIX than there's been at any time since like Armageddon. Which I feel like should frighten people more, but everyone's risk on. So T3 is the ACH settlement period. Which would mean that their assets under management should go up, and then they should deploy that capital to purchase whatever they need to match their NAV. Although we don't know how much was settled out of it. I got £100 Christmas bonus this year. It was infinitely better than my last job, where the bonus was you got to keep your job. How's SPX looking? Pretty flat at 46, 46. It's kind of cool that we fell to the downside of 50 and that we're not trading to the upside of it. That's why I'm buying 4,500 zero DTEs. What about slipping 4,700? I'm not even sure it's really mechanically possible for us to break 4,700 right now. I mean, I guess it is, but it would require an immense amount of buying. Vic's in a bearish ascending channel. I don't know if there's any liquidity on the December 22nd strikes. Any updates on Beyond? I updated it on Twitter this morning. Gamma neutral moved up. There's a little bit of liquidity. The majority of coverings is still next week. Or the majority of force covering is still next week. We'll see how quickly they drive, like they plow through the liquidity they got from yesterday. And how's Russell doing today? Russell's not doing so hot today either, which isn't great. It definitely helps to have the index pressure. Tesla recalls 2 million cars. What a piece of shit. Interesting discovery. Once you like the stream on Microsoft Edge, it doesn't show the additional likes after you like. I just opened the stream on Chrome and saw 50 more. If you just refresh the stream, it'll update the likes. Also, why are you using Microsoft Edge? That's disgusting. $18K volume on Upstart 42C. It seems unusual. It might be sold. VIX going up. You see an increase in put buying on SPX. Yes. As a matter of fact. Although that does appear to be coming to an end. Okay. Hmm. What's USD JPY doing? Down? Not a lot though. Ooh, dollars moving up. Fees up? Fess up? How over leveraged on Beyond are you? Not much. Like $5,000 in exposure total. That's, yeah, not a lot. I mean, if it hits at 10x's, right? So why throw a ton of money at it? Actually use a guy who watches your stream via a PlayStation Portable browser, then translates the stream into Egyptian hieroglyphics, which he sends via Morse code, and then I decipher. So how far behind are you usually? Like a couple days? Who died? Why black and white? Because I'm still sick. That's the rules. I'm still baffled SLD is this week. So the first on that Friday counts as the first week on December? What? No, it doesn't matter. It's always the Wednesday before OPEX. It usually falls on the third Wednesday, but not always. Usually like a couple times each year where it doesn't. How does the dividend announcement affect UGI price action? It'll probably drop relative to the dividend. That's usually how that works. Isn't that today? Tomorrow, right? So you get like a small drop as the dividends like priced down, then it'll usually recover afterwards. Is Beyond Gamma Max today? What's Beyond Gamma Max today? 1317. Is 45 a fortress until JPOW? Could be, yeah. There's a lot of interest at 40 and 50, so we could get stuck here. Might be kind of hard to pull out of this range. It came off Reg Show yesterday, so yesterday. That doesn't mean there'll be an effect, Bob. There may not be one. It's just interesting. The fact that the market is ignoring Volmageddon 2 makes me think the bulls now believe their narrative, even though it started as a lie. Is there a word for this? There's got to be a German word for this. Probably. Powell speaks at 2:30. Why is Oxy down so much? Because oil's been going down for like 8 consecutive weeks. And during that, they acquired someone for $12 billion in cash and shares. No need for a soft landing if you're never coming down. Yeah, there's no world in which JPOW wants no landing. What's up, Dwayne? Is Beyond dead? No, it doesn't have a lot of forced covering today. Like 47,000 shares, and it's below GN. So I don't think Russell's doing too great. Just kind of a flat day for it, probably. Holding above 10 would be good for it. The German word is sniffing my wind farts. You're the only one sniffing your own farts, Jay Fresh. Thoughts on Tesla if when it breaks 230? If when it breaks 230. I like the idea of potentially shorting Tesla below 230. I might kind of like the idea of shorting Tesla now as it breaks down out of its trend. Although there is some risk that it doesn't fall below 230, I suppose. I could find support one more time, which would kind of suck. Interesting. 229, 233, then 225, 213. Yeah, I could wait on it. Swafflin? Alright. Can we get some more BOJ speculation? It's the only thing keeping me hard. It's on the 18th. I don't think the situation there's changed at all. They had some, what data did they have last night? I think they had something. I know tonight they have machinery orders, foreign bond investment and stock investment, foreign stock investment, utilization. Oh, they have their industrial production tonight. That might be interesting. Probably not, but tomorrow we have Bank of England decision and EU interest rate decision. We have initial claims, retail sales. Yeah, not a lot out of Japan till the 18th. No, Grum 2. I don't use toilet paper. I have a bidet. I heard JPOW wants a Cybertruck. Any SPX plays this morning, or just waiting for JPOW? Just waiting for JPOW. I don't really want to play $5 chop. Let me translate stupid. Ah, okay. Do you think Oxy will go much lower? It could. Yeah. seemed to found a little support yesterday, right? Found some support at like 55. What's oil doing? Oil's up a little bit today. Historically, this isn't a terrible resistance. This range. So it might be alright. No, I was joking about 4,700. We're at 4,500 levels, but this is getting dangerous. Truly maddening dangerous. It's kind of nuts. They borrowed a bunch of shares of Fubo. Who cares? I probably lent them to them. Stream card. Love. Thanks, NW. I didn't make this one. I actually don't know who made it. It was someone new. We literally just keep running. Core at 4%, and we're hitting all-time highs because of higher and higher sales, only because prices have skyrocketed. Where do we go from here? I mean, ideally down. When Ivy Crush on dogshit brick and mortar video game store in the money calls. Oh, what's Jamie doing right now? So everyone's still sitting on their fucking next weeklies from last week at 15 and 14. They all think it's gonna MOASS. Hopefully the market drops, brings in some liquidity, fucks up their calls, and they sell them. If JPO is more hawk than Tony today, I think this will be the pivot that knocks this nutty momentum on the head. Fair. When are you going to use a legendary Carl stream card? I don't have a lot of Carl stream cards lying around that I haven't already used. But I suppose I could make one. Gherk, same like Kenny. Yeah. I've spent the last 2 years trying to teach you guys how to do the things Kenny does. If JPOW says rate cuts, hikes, pauses will need to be data dependent. They'll keep an eye on it. Will my 4800C print? Lol JK. I mean, I don't think the Fed's going to price in nearly as many rate cuts as the market's projecting right now. They might add one, but that would bring the total for next year to 2, and they would both be at the back end of the year, which means that Fed Fund futures would still need to reprice 2.5 other cuts that shouldn't be there. And I think that was probably the most optimistic outcome. The fucking core is still at like 3.8. I don't like super core, so I don't see where the fuck people are getting the idea that the Fed is going to cut rates, but I know they really want them to. When is my 45p going to go in the money? Before JPOW? I guess it could. If we reject off of 50. Does 25k for PDT need to be cash, or do they count the value of your holdings? It depends on your holdings, but usually both. Mint your stream cards into NFTs and sell them to the pickle jar. You can just right click and save them for free. Is this the day that vol pump? Well, vol's going up a bit. Yeah, JPOW really needs to push back against the Treasury and the administration, which, you know, isn't going to make him well liked, but there's supposed to be separation of power there for a reason. I would love it if he just raised rates. What if my holdings are 25,000 of UVXY calls? You're probably going to lose all your money. I don't want to speak too soon, but I think I may have bought VIX at the bottom yesterday. Nice. I picked up some June 4200 Ps at like VIX 11, which was cool. Well, when VIX was under 12, I guess it wasn't at 11, but it was like 1180 something. Why is coin up 100% in a month? Because Bitcoin's up? I think bulls go for 46.75 before the rate decision. There should be some decent resistance at 50 here. But our total range should be between 40 and 60, which I said earlier, for like the rest of the day. Well, until JPOW. I don't really think we have I really don't think we have a clear path to 75 right now. My dude, why VIX go up? Because we're like moving into like a massively influential Fed decision. That's on 1222, 4640P, 4675C strangle. Okay. And we are, yes. I thought we were cutting rates. No, people think we're cutting rates. JPOW hasn't said that. This is a nuke or no nuke situation. Yeah. I don't know why anyone thinks that we're cutting rates. Yeah, I really can't figure it out either. It's kind of odd for the market to price in the absolute most bullish scenario, and it's really loved to do that this year. And every time it's done it, it's been disappointed. But here we are, yet again, pushing for rate cuts far sooner than they're ever going to happen. Like, of all the scenarios the market could be pricing in right now, I don't understand why it's pricing in the most optimistic one. Because there's virtually no data that supports rate cuts anywhere in 2024. Like, you have to take a really specific subset of inflation that the Fed doesn't use. Um, and then you have to presume that those metrics dropping is going to be sufficient to bring inflation down to 2% in 2024, even though the Fed doesn't project that they're going to bring inflation down until 2025 or 2026. My dad thinks rate cuts because some governor wrote a law for rate cuts. What? Not everyone's into foreplay. Sometimes you just get on with it. Gherkin, JPOD called me and said there won't be 5 rate cuts in 2024. Instead, it'll be 6. How long will the market keep grinding up before it corrects? I mean, if JPOW doesn't do anything to turn around the current sentiment, yeah, Jan. We could get stuck here into Jan. I mean, we would need to find some sort of supportive flows to pad the drop off in charm after this OPEX, but we did in November. Charm's a lot bigger now than it was in November, but if those flows were to come in, I guess the one downside there is that going into Jan we wouldn't have the share buybacks anymore, and those have been a significant part of propping up this run. That's on 4650p for Friday. Okay. I mean, you'll make money if it goes down. That's Grim2, do you live on Arrakis? Because you're the thirstiest motherfucker in the pickle jar. Are 4,700 calls sold? Largely, yeah. I think most of the calls above like 4650 are sold. Some are bought, but not a lot. The dot plot is only lengthened the amount of time it's going to take to get inflation to 2%. We're from this year in 2021 to 2024 last year. Now it's being pushed to 2025. Market re. I mean, I don't think I'm pretty sure that JPOW hasn't solved a single thing that he's tried to, right? Like inflation's down, but not the sticky components, right? So we've gotten past the hurdle of whatever, supply shock created. But that can pick back up again at any time, especially with all the shit that's going on in China right now and Ukraine and Russia. And then like the labor market's still tight, so he's not gotten any slack there, which means that if he cuts rates at any point, spending's going to skyrocket and inflation's going to go right back up again, right? On the back of real wage growth. Yeah, I mean, the Fed really hasn't accomplished anything. And if they defeat inflation, this is what everyone's afraid of, right? This is like what banks and corporations and everyone's really afraid of, is that the Fed has actually gotten a handle on inflation and they're going to keep the rate where it is, right? And then as inflation drops, the rate becomes far more restrictive. Because the real rate is that spread between inflation and the federal funds rate. So if the federal funds rate stays at 5.33 and inflation is going down, the effective rate is increasing, right? And it's becoming more and more restrictive over time. Which is ironic because inflation's down a little bit right now. The markets are way up, but they should technically, like, conditions should actually be getting more restrictive, not less. And so they're hoping that the Fed cuts in advance of that. If the Fed doesn't, that flips the narrative to the Fed's going to do too much, which is going to freak everybody out. But I think most institutions and funds expect that. I think they expect the Fed to fucking do nothing, right? And just keep rates where they're at. And that's why all of this like upside positioning has been derivative driven. BTU doing share buybacks yet? They have been, right? They did like half of their market cap in share buybacks. I mean, I don't know when those end. I think 2026 or 7 or some shit, but they're ongoing. Yeah, Beyond's holding 10, which is good. That's the best you could hope for, I think. If the market dumps, it'll probably lose 10 though. The Fed needs room to maneuver. A rate of 0 gives JPOW no good choices. Yeah. What the Fed actually needs is they need that rate hike, that additional hike in the chamber, in case inflation starts to flare up again. And we already know that we're, $10 a barrel of crude away from like inflation increasing month over month again, right? Like if crude goes back up to 80 a barrel, inflation's right back. So we really haven't made any fucking meaningful ground. Well, at least headline inflation is right back to where it was. And then that's gonna, if that goes on long enough, it bleeds over, right? So eventually that's gonna push core higher. So yeah, nothing's fixed, but here we are. Pure hubris and greed. Successfully hedged my Vega position on this run. Nice. Thank you for all the knowledge. Well done, man. Very, very nice. Thoughts on Hal at these levels? It can push closer to 30 again. It could. Yeah. I'm actually kind of hoping it drops a little bit more because I don't want to get assigned. But it's possible that God fucking damn it. It always brings up Hindustan Aeronaut. I'm kind of hoping for it to fall back to trend at like 32. And then I'm going to close out of my covered calls. But I think there is some chance that it falls back to 28. Gross. Fidelity's urgently working to restore service again. Oh, it's going to be a wild day. Fidelity customers aren't going to be allowed to buy puts. I kind of just want to see 46, 66, 66. All right. TW getting into pushing specific equities. Who the fuck is TW? Trading View? Oh. I mean, TV? Never heard anybody ever call it TW. Well, all 5 people trading on Fidelity are in shambles. Fuck Fidelity. Log into ATP before market open. Never close it before market close, and you'll be in better shape than most. Yeah. Pricing up oil stuff and deciding what I want to pick up. Fair enough. Yeah, I might increase a little bit of oil exposure here, but I'm pretty happy with what I've got. I've managed to lock in most of the upside from the surges in crude with covered calls. So yeah, I've been pretty happy holding it. I'm gonna keep holding Hal, I think, for like maybe 5 more years or so. Some of them, Oxy, I'll probably hold equivalent, like for an equivalent period. DVN, I might not, but I'm gonna hold it until the Fed starts actually cutting rates. That's on Apple. One second. I might have a little more room to go before it tops out. And it may retest its all-time high. There's been a little bit of accumulation of call interest again over the last like 3 days. So it's trending a little bit more bullish, but not a lot. I suppose that could break down pretty quickly. But I probably wouldn't short it here. Actually, I definitely wouldn't short it here. Maybe if it slips back below 90. Can you check if Apple's doing a Wyckoff? Most of like the Mag 7 looks fairly distributive. Did anyone say that Tesla recalled all of their cars? Yeah, I saw someone mentioned the news earlier. No, 2 million. Okay. Beyond call, same like hedge for SPX put. No, I don't think so. I mean, for the most part, Beyond should be illiquid enough that it ignores most market movement. That's all the cars in the US. That's like half the cars. Whatever. $25 till the dot plot. What? No? At 11? 2 o'clock? Yeah, Pacific time. But we don't use Pacific time. Meanwhile, Ford has had 3 physical recalls in the last 4 years, but nothing in the news about them. Well, Ford's not massively overvalued, to be fair. I just got an ad for the country that I live in. Okay. Are you gonna go there? County. Oh, okay. I repeat my question. Did it make you want to visit where you already live or not? Sorry, it was hard to separate the times as a Europor. It should be like UTC -5. Taylor, there's lots of opportunities, so I suppose so. Nice. Did it make you feel like you're underutilizing your community? Ugh. Gross. This is why I don't live in the Midwest. People use words like community. Come see the vast open emptiness. It's beautiful this time of year. What would you guys rather have? Crime or neighbors? Does JFresh become a YouTube mod when he exceeds your Twitter follower account? No, I ban him. I mod Dork and then I let Dork ban him and then I boost Dork's account. And then when Dork has more followers than JFresh on Twitter, I unban JFresh, mod him, and he gets to ban everybody. Henri. Are you trying to say you have no crime? No. Oh, Jesus fucking Christ. Why are super stonkers asking me questions? Holy fuck. Why doesn't JFresh get this on Twitter? I'm gonna send them his way. I wonder if I could convince Superstock that JFresh is the penultimate source of information on DRS. If he wants the fame, he has to have the burden. If the Fed is hawkish, what is a reasonable level for the SPX to pull back to? I want to say 4,100. But I'd prefer further. Yeah, I don't think any value has been generated in the entirety of the time that the market's gone up. Actually, GDP forecasts are down. GDP forecasts are down and core inflation is up. So we've actually, in the last month, we've become more stagflationary. Yet the market's up 13%. Why are you looking at Twitter? I don't know. I got a notification and I looked at it. Someone says, question for you. What happens if retail DRS is the free float of GME? They currently own 25 to 28% of the entire company. No. So roughly 60% of the available free float. Also no. Loss of supply will increase demand. No. If there are fake shares in the system, then demand shouldn't increase, right? Jesus Christ. Fuck my life. Ick. Did Netflix cure cancer? Not that I'm aware of. Is it doing something fun? Oh shit. Apparently. Oh, they released their full viewership data for the first time ever. Its first ever engagement report, revealing the viewership of its top programming through the first 6 months of the year. The streaming giant has previously declined to release specific data on viewership of all of its programs. The engagement report released Tuesday reports hours viewed for over 18,000 titles, including Netflix originals and licensed content. The company said that titles in the report cover 99% of all viewership on Netflix and covers almost 100 billion hours. Jesus Christ. Oh, God. How embarrassing. They know how much Netflix we watch. I just want proof that nobody really watched Bird Box. We really needed to go outside and touch some grass, like as a society, you know? Isn't that data kind of valuable to keep private? Well, not if you're an insider and you want to sell some shares. Are we just going 45-degree angle up until JPOW? No, but maybe. I don't know. We can trade all the way up to like 45.60. Is anyone else benefiting from this massive pump in Netflix? Apple a little bit. Half of those hours are me when I've fallen asleep trying to watch The Irishman. JPEG raising rates by 0.00001, same like Volcker. No. Have you looked into getting the FOMC report a few minutes early to front run the crowd? That'd be really cool. I don't know how we'd pull that off. Do you want to volunteer to be an intern at the Fed? Stats on Netflix are just a touch behind YouTube as far as hours watched per year. Is interesting. That's a lot. Yep. Yep. Human race is becoming more and more useless. How quickly would you cut the losing side of your straddle after the decision? Seems like this will set the tone for the rest of the year. Generally speaking, we don't lose or gain a lot of ground until JPOW starts speaking. So usually I kind of hold through the presser, and then during the presser I start moving out of positions. But if it's very bad, super hawkish, I might cut the call side earlier. How quickly would you go? I don't know. You're pretty useful. Thanks, Jen Jen. My Netflix splits for the end of December don't like this. Well, stop them. Thanks, taking off Friday. Look, Gork, I could be making art or creating something or doing something productive, but instead I'm gonna max out my covered covered credit card ordering DoorDash and watching Holiday Wars. You know, it'd be the worst afterlife. The worst afterlife is if you died, and they told you like how much of your life you wasted on bullshit. I get it. I get it. We're all just trying to bide time until we die, but how many of those hours are Baby Shark on repeat or corporate monitor with The Office just spamming through episodes? Friday OPEX is 5 trillion. Yep, it is. If you've noticed, all of our OPEXs this year have been the biggest in history consecutively. 8 hours a day at a job. Yeah. That wouldn't be the worst. At least there'd be an afterlife, I suppose. I mean, the numbers alone for necessary trips to the bathroom over a lifetime are depressing enough. That's why you've got to just shit and keep moving. You know, don't. That's the kind of I don't know how we fit that into our infrastructure, but we should figure out a way. Amen to that. That's what Carl does. If you've ever followed him through the office hallway, he'll just lay one out and keep going. He doesn't have any time to waste. He's a very busy man. What if they gave your KD ratio and it's greater than 0 to 1? I mean, everyone's probably inadvertently been responsible for someone's death, right? Go full hedgehog. It might be almost as depressing as a counter telling me how often I beat my meat. I mean, you can only make it so tender, Grim 2, before it just starts to fall apart. I haven't heard a human voice uh, as much as or for as long as I have yours. It's a pleasure, Pickle Man. Thanks, new week, new name. That's kind of cool. Or they show you how depressing your life was and then reincarnate you into someone more boring. Oh. My brother's KD is something like 40. Ballin'. Butterfly effect. Yeah, exactly. Decision out at 12? No, 2. It's always the same. It's 2 and 2:30. True. Never trust a librarian. They'll get you. Them and their fees. The fees are just ridiculous. I'm not ashamed by the number of times I've beat my meat, but I'm ashamed of the number of hours I've spent watching the Food Network. Just chasing Nirvana, huh? Carl spent this many hours asking Gork how his wife is. Can you move the VIX over a bit? Why, it didn't get more interesting. This is the opposite of the truth. Do not slander me, salty shawarma. We are fines free? What does that mean? My library went fine free. Who's paying the bills then? A lot of libraries are now forgiving fees. They're getting all the lost books back. I'm not giving them back. Fuck that. Inverse Iron Condor on SPX for JPOW. Ew. That's gross. My library was sent me to collections for Intelligent Investor. Who's giving the library their social security number? I've had my library card since I was like 12, and it just says my name on it. And I don't even have a last name. I just put one letter for the last name. Because I was like 4 when I filled out the fucking application. You still have your parent as the responsible party? I don't think so. Maybe my grandma. She's dead. I've never received any mail from the New York City Library in my life. And I definitely have books I haven't returned. Gherkin not even doxing himself IRL. What a fucking Chad. Sounds like your card would be expired. When's the last time you tried to use it? Saturday? I used their Bloomberg terminal. I don't really take anything out of the library anymore, so I just kind of flash the card at them, and they're like, oh, okay. Put a time down that you need to use the terminal for, and then I just... Your library has a Bloomberg terminal? Yeah. Yeah, they do. It gets weird sometimes. The last time, infamously, last year, I was using it one time, and there was this, like, homeless guy who kept touching himself sitting behind me. Those were tight quarters, but, you know, he was just trying to watch porn, so... Do you actually find it useful? Sometimes, if I'm trying to look up something specific or do certain comparative analysis. I can use it through my school, too, but they're getting pissy because I'm not going to classes right now. And the guy who's in charge of it I don't think he likes me very much. It's your fault for having your calves out in the library. Yeah. No, I don't go to Harvard. Ew. Imagine being so dumb that you have to go to Harvard. Something unpopular. Martin Scorsese gets too focused on history and not enough on the story. Every 3-hour movie is just a collection of scenes with a real narrative drive. The Departed still rules. Yeah, The Departed's amazing. Have you considered spotting the hater at 20? I heard pores like money. No. I mean, I know there's a lot of smart people that go to Harvard, but everybody I've ever met that's gone to Harvard, like, went there because their daddy bought a building. So, if there are smart people at Harvard, I've never fucking met any of them. It's like nepotism central. Yale, too, a bit. You need to talk to people outside the business and law department. Probably. But why would I do that? I was thinking about with a gal that went to Northeastern and all they did was shit talk Harvard. Harvard's literally perfect in that regard. You get to make bank and even more connections and keep the Nepo ball rolling. True. Smart at Harvard are out trying to pay the bills. They don't brag about it. Yeah, I'd imagine. At what, 98,000 a semester or whatever the fuck it is now. It's not that hard. It's not hard to pass classes from what I understand. No, not really. Oxford's like that too. I wouldn't know, but I'd imagine, yeah. It might be 100K a year. I don't know. It's the tuition's fucking ridiculous there. $79.5K a year for tuition and room and board. Okay. Well, that's not as bad as I thought it was. My MSFE program was like 57,000. Which unfortunately I've paid completely in advance. Despite not actually wanting to finish it. Not everyone should be able to go private. That's why it's private. I mean, if you have enough money, you can go wherever you want. It's not inflation, it's defunding of state schools. My state school is $7K a year, and it shows. On a scale of Pigeonwheel to lowly, non-paying poor, how smart is it to go 35 contracts short on NQ right before the minutes release? How tight of a stop are you thinking? That's a lot of fucking exposure. We should have started calling you master so early. Robbed you of your motivation. I don't know if I ever really had any motivation. I was just bored. My school was 55, 60K a year. Why are you guys spending so much on college? It's expensive. You can only be in community college for like 6 years, Doric, and then you got to step it up. Pro tip: lie about your credentials on your resume. No one ever checks. What happened to your Beyond calls? I cut them. I'll pick up more exposure later this week. They weren't on this account anyway, but I cut them until next week. I still have some Jan exposure at like 15. But the short dated shit you can't hang on to while it's chopping like this. Entire bachelor degrees in Australia are 50K. I did that, and I moved to where the uni was and declared residency for that sweet, sweet in-state tuition. California has really cheap. Did you go in California, Dork? No? Oh, okay. I was gonna say California is really cheap for in-state tuition, like UCLA and stuff. There's actually some good schools. New York is too, for SUNY and CUNY, which has some alright schools. Like Baruch is part of CUNY, which is a really good school for finance, and like City College for sciences is pretty good. The problem with a lot of in-state schools is they're garbage. Go to a tech school, 20K a year max, make 250K a year. It's really that easy. Are you a dev? If your college tuition costs as much as your yearly salary, was it worth it? Probably not. What will AI do to higher education? Ensure that more people get answers wrong? Would you buy a 70T for Beyond next week or longer? I don't think there's any liquidity on the options for next week on Beyond. The drop in Beyond was me selling 50 calls. Yeah, the majority of the forced settlement is next week. But it started running yesterday and pushing up, so I got a little bit more exposure in case it popped off, but it didn't. And Gamma Neutral moved up today. So I think we opened today below Gamma Neutral, which is, yeah, that's a good time to cut shit. How are futures looking? Boring as fuck. Did you ever cheat in college? No. 64K for my degree, which I have yet to use. I had a good time though and developed an appreciation of excessive drinking. So I opened up a business that catered to that. Good times. $16K for my whole associates. Dirt cheap. Yay, community college. Nice. What's the OPEX implication on top? I don't know. Top's actually getting a little bit of covering today again. That's interesting. I mean, Top hasn't gotten any not like any substantial liquidity back. It may be that breaks after OPEX and we start to see more covering, but I'll probably get a little bit of exposure to it going into OPEX. That means that the MM hedge is no longer positive, right? What does? Like right now, the MM hedge is positive. But if vol goes up 1.6, there's no more hedging and the downside just opens up. Opening below GN. Yeah. So on I'm sorry. I thought you were talking about SPX. Yeah, on Beyond it means that the gamma hedge flipped negative again. Which isn't necessarily bearish or anything. It just means that the market maker's selling the downside, which is more advantageous for short positions than it is for long. People are always like, I'm not using my degree. What are you, dead? Unconscious? I mean, I think they're saying that they're not working in a field where their degree would be applicable. Or at least the focus of their degree. But one MCL, one patellar tendon, one PDL, one LCL, some of my meniscus and cartilage, one UCL. I shattered a kneecap that also dislocated, 3 broken noses. Ouch. That might be a higher cost later in life than a student loan. Massachusetts has some good programs where you can attend community college and transfer to state universities for the same rates per credit. Yeah, New York has that too. I think California as well. I still don't understand how that works with SPX. What? How does that guy have 3 noses to break? Actually, a lot of states have like a community college to in-state program, right? Like transfer thing, but a lot of state colleges suck. Like what? Who's got some good in-state colleges? I know Massachusetts does. New York has a few. Um, California has like UCLA, UCSF. Michigan? Yeah. U of M. Is U of M public? Yeah, the SUNY and CUNY systems have some really good colleges. But like top 10 state schools are pretty few and far between. Top 20 even. J for 6, and I would like Georgia to get a mention. Is Georgia Tech public? North Carolina? Hmm. Okay. Texas, Indiana, and Virginia all have good state schools. Yeah, yeah. Indiana has a few. IU or whatever. Purdue's private though. University of Ohio is not bad. University of Nebraska is the best in the state of Nebraska. Tesla nosediving 230.14. Ooh. Really? Alright, well. It's time to do Tesla things. Hmm. Like that. Yep. I could put a stop on it. I don't know if I need to. Yeah, I'll just leave it. Well, 30, 15 days. I hope that one guy starts selling puts right now. Mm. Any thoughts on Boeing? Not really. Might be getting close to a top. Not sure I'd want to short them with the two ongoing international conflicts. Let me look at something else. 1 second. You think about going short or long? Because like you missed the window for long, I think. It's pretty close to Gamma Max, although I don't think that matters that much. But Gamma Max is at 252. And people have been taking profit on calls for the last, since like the 6th. Pretty consistently. $26.25, 4,600. $2. That's kind of pricey. Maybe this will bounce again. Where's the next support on Tesla? Ooh, 25? I guess 27, 25. And then 21, and then 217 after that. Wait, how much fucking... How big of a spread did I get? Oh, okay, $20. That should be good. Tesla holders be like clench. Yeah. What's bearish for Tesla is bullish for Nvidia. Don't know why. It's totally not to stabilize the S&P 500. Elon Bulls will spin the recall positive. I mean, I mostly just care about the options positioning. I don't really care about the recalls. I don't think that's that big of a deal. Hmm. Actually, Nvidia doesn't look that hot. This is pretty close to fucking resistance. If this fails back below 80, then it's pretty bearish, I think. And way more bearish if it falls back under 476. I'm going to repeat myself. I don't care about the recall at all. I care about the options chain on it breaking down. Is Beyond dead? No. But there's not a lot of forced covering today. So shorts are going to try to take advantage of it as much as they can. Technically, as long as it stays above the majority of put interest at $9, it's still got room to move. But we may not see a lot out of it until next week when forced covering picks back up again. BBBY holders picking on AMC holders has to be the saddest thing I've seen today. Wait, what? How does somebody who doesn't even own a stock pick on somebody who has an asset? I mean, they might have a shitty asset, but they still have an asset. I have a bit of theta to cover next week for Beyond. I'm getting hammered today, though. Is it better to cut and reposition next week? I think so. I'm gonna keep the Jan 15s because I bought them when we were still around like $9. But I cut everything that I bought above 10. Because I think tomorrow it's like, so today there's like 50,000 FTDs that need force covered, and then tomorrow it's like 75. And on a falling market, right, like Russell's not doing well today. That'll pump in some extra liquidity. But on the 18th, it goes up to 400,000. Same for the 19th, right? And then from the 21st through the 22nd, it picks up about 200K a day, up to 1.1 million. And then it stays around a million force covering a day for like the next 3 days before falling off again on the 29th. So for short dated shit, I probably wouldn't get anything till the 18th, 19th. Maybe even the 19th, like wait till some of the forced covering is in and then. Yesterday, did you say something might cause early covering for Beyond if it broke delta neutral? So if it broke delta neutral, that puts most of the shorts for the last like couple months underwater. Yeah, here they're just gonna like they're just gonna fight for like 9, try to get it back under the put wall at 9. Beyond drilling, yeah, probably mostly just due to people cutting options at the break of 10. Believe it or not, when things are that illiquid and volatile, they can move a lot in either direction. Illiquidity swings both ways. I didn't tell everyone this morning, right? I feel like I did. Plenty of warning. But VIX did go down a little bit there. I think they're just trying to stabilize 4650. Great warnings on Beyond. Thank you. Exited positive calls yesterday. Waiting for a new entry now. Learning. Nice, dude. Selling puts again and making the market go down. Maybe. The farther dated, so the farther dated put selling doesn't really drive the market down. It just shorts VIX. It's when they try to sell short dated puts. That's when they push the like the near term hedge, like positive Vega. So you saw it a lot yesterday. Like the market would step up and move to like a breakout, and then they'd sell puts and it'd like fall back down, and then they'd have to buy back again. That's what they're doing when that happens is they're selling like a shitload of 0 DTE puts, and they're buying like the out of the money call strikes. But by doing this, they're actually pushing the long the put they're selling, right? And so I don't think a lot of participants know this, but some it would appear that some do and some don't. But yeah, you get like bulls that try to go synth long on the breakout, and it pulls the price back down. There's another set of participants that are being very careful with their put selling, and they're using short calls instead, and that's why the upside's so grindy, right? That's why it's like, instead of, you know, having like big breakouts. Beyond will be fine as long as it stays on reg show. That's all that matters. But yeah, I mean, it's something that it's probably going to need time. And the majority of covering for the like the forced covering has always been next week. The problem is if the covering leads to pressure on the options chain, it can break out before the forced covering. So your options there are either get short-term exposure, eat some losses, and see if it breaks out or not, and then, you know, buy back in, sell out, buy back in, sell out, or get longer dated exposure and wait. But today and tomorrow are two of the lowest days for the forced covering. They're like sub 100,000 shares, right? So these are going to be the 2 days where they try to short it the hardest. And since we opened below gamma neutral, you know, it favors the bearish position. I can't feed my family by eating losses, Clark. Then don't play risky meme stocks. I don't know what to tell you. Buy something that pays you a monthly dividend. Quick 16% on Tesla. Thanks, Gherkin. Nice, dude. I hope that didn't come across as a serious comment. No. Beyond ouchie down downs. Well, 30 cents, but sure. You touched on BTU on the Dill stream. Looking like it may head sub 23. Curious if you have a short-term price target. I don't. I have some like 90 DTE $20 CSPs out on it. And I have some $25 calls out on it for like, well, they're less than 45 now. I'm not actually sure how much theta those have left. 30, maybe they're like 37. I have some like 37 data expiry calls out on it at 25. So just covered short strangle with like a $5 range. The yields are okay. Tesla 30 DTE 250 calls now. You could. To what end? You think Tesla's gonna go back up? Yeah, it might. I guess it could bounce off 25, but we're not quite there yet. I mean, this isn't from a technical standpoint, this isn't bullish at all, right? If Tesla fails 27, that's really super fucking bearish. And then also, you know, it's falling below, like Charms flipping negative here. It's starting to fall below the short and long term, like delta and gamma neutrals. Delta is a little further down. Delta's like down here. But GN's like right here. And if it breaks that, it's gonna accelerate. And if it breaks DN, it's probably gonna test like 187 at least. Maybe lower. Maybe like 175. The biggest chance for a bounce there would be here at gamma neutral. That would be like that. Yellen says US will have a slightly tougher job to control deficits if the interest rate environment remains very much higher than expected. I hope JPAT wins. I really do. PTU goes down and then it goes back up. Don't worry. It's actually the best. My Beyond's getting wrecked. I tried to set a stop earlier and I got distracted by work. Well, just to let you know, it's probably going to have more short pressure tomorrow too. If it's any consolation, I think most of the like we broke $10 breakdown is over. But it's still below gamma neutral for now. And so the market maker's still selling into the downside. And tomorrow's forced covering is only like 70,000 shares. Doesn't pick back up again until the 18th. Is it the 18th? Yeah. Yeah, morning of the 18th. So that's going to be like after, that's going to be like next Monday. So you may find an advantage in cutting and repositioning. If you have a lot of theta, maybe not, but if you don't, puts are overpriced, so there's some opportunity to take advantage of the downside, depending on your risk tolerance. Bull put spreads have some nice returns, I think. Yeah, not bad. We take like 20, like 45% return on risk at like 959. Wow, there's no fucking liquidity on that one, but that would be about 50%. I sold $10 CSPs on GME. It got me $1 a contract. Nice. Nordstrom puts have been super nice. I want him to so bad. Yeah. Yellen is. I really don't like her current approach. She should be selling more duration. She's fucking the economy for political favor, which is a bad look. No reason for investors to feel nervous about US debt. Well, I mean, there isn't, right? Like, we can rack up a lot of debt. It's just not good, right? Not in the long run. Sold $10 CSVs on GME. You got me $1 a contract. That's not bad. The spread on some of those Beyond calls is ridiculous. Yep. Yeah, there's only a few dates that have good liquidity. But Beyond has been picking up more like smart money interest. So I think next week with all that forced covering, as long as it stays on reg show until then, looks pretty promising. Somebody has to take the fall, and Yellen is already so close to the ground that it can't hurt. Hmm. Well, that didn't get fucking cheaper, did it? Okay, that's starting to drop. That's cool. What happened to the elf that lived in your computer and told you when orders filled and closed? Oh, the future, my the future's fucking. I turned that shit off because it's annoying. EXR went up nicely over the last month. What's your plan with it? I'm not sure yet. I think it went up a bit too much too soon. I think that JPOW might have an effect on it today, so I think I'm gonna try to get some in the money calls sold a little closer to 120, scout back the price differential, and then see how the interest rate environment looks for 2024. If it still looks good, I'll close up the covered calls. If not, I'll leave them open, see where it drops to. Like I really like EXR, but I think it would perform even better um in a recessionary environment. I think it can get pretty cheap again if interest rates are gonna remain higher for longer. So yeah, I think I'll like try to sell maybe like 120s, 125s. Let's see where I can find liquidity. It's usually pretty slim. Um and then if I can get some fills on those, I'll just sit on them. Yeah. And then, then if it keeps moving up, I'll close them, keep my shares, pay the difference. If it moves down, um then I can, I'll make the difference in price that's lost. Uh on the change in the interest rate environment. I think if rates start getting cut for next year, REITs are gonna get hit pretty hard again. Like O's had a phenomenal recovery for basically no reason. And I still think like CRE is gonna run into some problems in 2024. Bath and Body Works is doing a thing. Either momentum for short calls or entry for some longer puts or both. BBWI. Is that an IWM? Mm. It's an XRT. Oh, okay. Hmm. XRT should be all cleared out. Yeah, it looks kind of bearish. That might be a good opportunity for like call spreads. Is it worth it? How's the IV? How do I get back on the horse? First start paper trading and stop losing all your money. I'm not kidding. Find some strategies that are lower risk. How low will they try to short beyond through tomorrow? I mean, I think ideally for bears it would be under 9. They may not be able to pull that off though. There's quite a lot of call interest still at 10. Despite the little sell off here, there's still quite a lot of call interest. So I think hopefully it'll stay pretty stable between like gamma neutral and $9 over the next couple of days. And then next week, when there's more forced covering, it should be able to run a bit more. IV's still super low. Yeah, maybe it's not worth it then. Or well, I guess you could go puts. Go puts and target like 32 if IV's cheap. Fucking diamond handing GME people. Look at these fucks. They're still sitting on like $5,000 $15 calls for this Friday. Despite having lost, 300% of the gains. Assholes. I'm sorry, 6,000. Apes hold together. It's so annoying. Three whopping bips. It's a market crash, folks. Yeah, Dork, when's this gonna get back above 4650 so I can get some fucking downside exposure here? How else am I supposed to lose money? I don't know. Ooh, what's this? Okay, that makes sense. Hmm. Neat. Oh, so the last one's combined. Yeah. There's like 42% of the gamma on SPX falls off on Friday. I was actually looking at that last night. That's why I had JFresh send me over the end of the day data. I was digging around. Zach's up GB to strong. Who gives a shit? No, I don't think Zach's just says stuff. They don't. I don't think they openly buy or sell anything. Do you like YCL or FXY safer? FXY is safer. YCL is leverage, so you have to deal with vol decay. If something breaks, YCL is great for short term, right? Provided there's actually some liquidity there, which there rarely is. I prefer yen futures. They're way better. And you can get so much time. You can get all the time. I can't wait till after JPAD a full port Palantir puts. Why, you might ask? Because how else can I see the rugged, disappointed face? You really just want to short. Why do you get so. Thunder, answer me something. Why do you get so hung up on something? Like, once you make money on something, you get very attached to it. Don't do that. That will fuck you over. My parents don't love me, so I found love in equities. All right. Paper trade an income driven strategy and learn discipline on how to utilize the earnings from that so you can get a realistic idea of trading earnings and not risking your port's value. Yeah. I mean, learn to leverage up income strategies. And then once they're leveraged up, then learn to use the excess earnings to play more speculative stuff. Do you think there's more room for Palantir to go down? I mean, part of me hopes no, because I want to get assigned on my in the money cover calls. But there probably is. Let me take a look. Yeah. Below 16, then to 15, and then from 15. There's really not anything stopping the downside at that point, I don't think. So I could just keep falling. It's still above like delta and gamma neutral right now, so those are at 16 and 15. I would say that options interest over time has been falling off. And probably far enough away from their next earnings to at least see like a return back to like the $14 or $15 resistance. So yeah, I still think it's got a little bit more downside. Then if they whiff earnings, which they're bound to do eventually, they could fall further. Yeah, fucked over. My greed got the best of me. Yeah, it's hard to manage sometimes. That's crazy. I have the exact opposite problem. I start to hate my stocks. They make me too much money. I want JPOW to cut rates. Let's bring on inflation part 2, the inflationing. Interesting. That would be very bad for a lot of people. Are they strapping rockets to the meatball to kick off the Italian space program? No. No, I think we're still kind of stuck in our 4640, 4660 range. Which is probably going to end up being more like 4645, 4655. But, you know, that is technically the middle of that range. Did Dork name his clown masterpiece? And why is it called Hand Banan? I don't know if he did. You'd have to ask Dork. It would be bad for almost everyone. Yeah. Do you think picking up some puts here is dumb before JPOW, or better wait for direction, or is this kind of a top range? I don't think it's stupid, but I mean, make sure that your exposure is hedged off in case things turn out maybe more bullish than you had previously anticipated, right? You too, Jim. Thank you. Are any of the 0DT puts below 4,600 sold? Or just selling every strike of vol they can manage? They're actually not selling a ton of vol today. They've sold a bit, but it's been lighter than usual. What are your thoughts on 0DT IV on SPX? Seems underpriced if JPOW comes out super hawkish. It's pretty cheap, actually. But that, I mean, part of the effect of that is they do have to sell vol. And there is some vol selling. It's just not a lot. If they stop selling vol here, then they can't support the market price, right? And we can move to like the downside of the hedge, which is at like 4,400. Think about IV crush, or will it not crush that hard? There's actually not that much of it. It'll crush a bit, but you could buy in the money to dodge that. You could use spreads. Are you straddling into the speech? I haven't decided yet. I've still got 2 hours. Oh, okay. That wasn't even that bad of a deal. Take a Tesla short. That would go long. So if I go long here, I really only need like 1 day, right? $30. That covers all of that. So at 50.80 was $11. It's kind of expensive as fuck. 70, 4,700 is 6. What a grind on SPX. Yeah. Six, 25, 25. That doesn't seem too unreasonable. Although, I'm not really sure that there's any reason to... you know what I could do? Actually, this would probably be better. I could do December 15... Oh, son of a bitch. December 15... Fucking... $10. Do 50, 60... 15... So if I do 2 of those... PT on GME? How much time? It's not gonna drop hard until probably after the... Well, either the $15 calls go out of the money and stay out of the money, forcing capitulation, or until they expire this Friday. If JBET comes out and says hawkish things, how far do you think the SPX could drop by end of day? Potentially 45.50. But more likely, it's like 46.25 or 4600. Depends on how hawkish he is. Although it's been a long time since we've had a good 200 basis point end of day drop. There's a survey which says 50% of males believe they can land a plane in an emergency situation. Do you believe you can? No. That's why my carry-on's a parachute. Also, I met a chick last night that I'm kind of into. Don't ruin this one for me, please. What's her name? Did Gherkin give his thoughts on the weird expiration that everyone's been hyping? Are you talking about the fucking the swap like overall? It's just a placeholder. There's no fucking quadrillion dollar swaps. These people are idiots. Actual fucking morons. I hate you? Why? I just wanted to know her name, man. God. You're so insecure. Can I use your Minotaur pictures on my Tinder profile? I don't give a shit. J-Powell won't be hawkish. Nothing about anything he's said for months indicates he's going to say anything other than we will continue to look at the data and make moves as the data supports it. That's one of the most hawkish things he can say. The market's pricing in a shitload of rate cuts. If he's not promising them to them, they need to reprice that. This girl that's been flirting with me at work, but I knew she had a fiance, so I just tried to avoid her. Turns out she's in an open relationship, and I missed my shot. Yeah, I don't know. Getting shot by boyfriends in open relationships is the same as getting shot by boyfriends that are in closed ones. Remember that guy that flew a drone around the Citadel building? Not crazy at all. Buy calls without stops and ignore technique didn't work today, guys. I mean, it did if you did it this morning and then closed them when you were up. But he keeps saying that, and the market says rate cuts. Yeah, but if the dot plot's not inferring any rate cuts into still until the end of 2024, the market needs to get rid of about 3.5 of the ones they've already priced in. It doesn't matter if they care what he says. They'll still reprice Fed fund futures, right, which is gonna drive dollar valuation up. Right. I mean, like no one's gonna leave the pricing the way it is if the Fed's not cutting rates, right? And then that's gonna push credit spreads wider, which means yields up, and that probably means equities down. Higher demand for vol in a situation where vol is free. Trash Can is into getting shot by guys. Maybe. Dot plot will be super decisive, I think. Like a full vertical line of dots on every date. And the bulls will only see the bottom 3 dots. And just like that, beyond $10 CSPs for next week are yielding 10%. That's really risky. Are you sure that's something you want to do? I don't think it's worth the yield. I would not want to own the underlying at all. Never believe anyone that claims to be in an open relationship. I don't. Although I do believe people that are like, I'm not in a relationship when they are. So, what does that tell you? Tells you people are liars. Yep. Isn't Carl in an open relationship? Oh, no. Not at all. Gherkin and Carl's wife are in an open relationship, but not Carl. Gherk is notoriously trusting of people. No, I'm not. Anything fun coming out of Tokyo in the last 30 seconds? No. Oh, I almost died. Beyond short into OPEX, bullish. It's not really getting shorted very hard. They don't have that much liquidity. Mostly you're just seeing $10 calls sell off because people are getting shaken out of their positioning. Spooked, if you will. Kudos for still having a gag reflex. Thanks, Princess Peach Fuzz. What probability would you give the dot plot or JPOW to be hawkish? I think both are pretty hawkish. 80%. That's what I'm leaning on. You never know who is the partner of your one night stand. Why take unnecessary risks? What risks am I taking? SPX 4700s for Friday. A good hedge for FOMC. On the call side, I don't know. Kind of still hard to get there. Even if things shake out devishly, I think 4700 might not be on the table this week. I drew a pre-market high and low. If I just traded that, I would have made like $20 today. I'm in an open relationship with bulls and bears. It's a good place to be. You don't want to get tied down. Why hold your straddle till presser instead of taking profit on the move today and opening a 0 DTE one? There wasn't that much. I mean, there wasn't that much more profit on the long call than I've already realized. Like, it hasn't really moved much. Couple bucks, but I'd rather just keep the exposure. If we move up hard and like we press the upside of the call interest, then I might consider closing it and moving into like a 0 DTE. Genital warts would be the only one I'd worry about. Just like, don't fuck someone who's got an active breakout of genital warts. I mean, it's not that hard to tell. Everyone doesn't have warts. That's just something people with genital warts say. I was in the other room. Are we having the genital warts conversation now? Yeah, again. So it's just a peek down there first before the blindfolds? No, just close your eyes and stick your dick in anything. What if they have a good-looking face? It might be hard to pass up. Really? No, it's not. I don't have genital warts. You know why? Because I don't just blindly stick my dick in things. Especially things that have genital warts. You can get the vaccine, right, Dave? When you Ueda sexually assault the carry trade. What are they gonna say next? That everyone has pubic hair? Would you smash Faye Reagan? I don't know who that is. I wouldn't smash anybody that had genital warts. Before you make whoopee, you pull out the microscope and STD kit. You use a black light. White wine vinegar. The stream cut to an ad right at the end of your wart rant. It was the perfect mic drop. J-Pow definitely has genital warts. I spent 5 minutes trying to get YouTube to not shadow ban my comment. Fair. I'm taking this hedging thing too far. No. No problem, Brian Collins. Not a doctor, but I appreciate the vote of confidence. What do you do with white vinegar? Pour it on, and if it burns, it's warts? No. You could test for genital warts with an acetic acid solution test, and so if you put it on genital warts, it turns them white, which can help in identifying like the lesions. Not burn them. It's not like a lemon test. This isn't your fraternity, you dick. It's an actual scientific solution. I know a lot about not getting genital warts, Gary Gensler's twin. Gherk, just stop. Listen, Gherk's publicist, if you can't spin this positively, I clearly need somebody else to handle my PR. Dude, Dave finally submits, and then you explain you have to run a few tests first. Exactly. There are no false positives. All positives are a negative. You just walk away from any positive. How does anyone sleep with you? I don't know. It's worked so far. $5 trillion in stock options expire on Friday. 80% in the S&P 500 linked contracts. Largest expiration in 20-ish years. I don't know if this matters. Seems like it might. This is the reason I carry wart drops in my wallet. No. This is what you do. You get a pack of like baby wipes, like unscented baby wipes. And then you just pour a bottle of white wine vinegar in there, let them soak up the vinegar. And then, you know, just offer one as a pre, yeah, like a refresher, you know, an aperitif. And then if anything turns white, just be like, oh shit, I have work in the morning. Pre-coitus hot towel. Exactly. Pepe will supply the tans with these so-called wipes. No, they're too far gone. Do you give your dates a departing gift and pay for their Uber? It seems gentlemanly. Women don't usually respond well when you suggest they freshen up. Why? That's like guys saying, oh, my balls don't stink. That's ridiculous. You've been out all night, walking around, going places, dancing, drinking. No freshening up. Just going for the just skipping all the no. Make it nasty. Dads use malt vinegar, but that's just for taste and smell. Gross bunch they are. You look really pleased with yourself. Is it because of how proud you are of your wart detection foreplay? Or the reaction you're getting from chat? Both. None of you have a good reason why that's not just a fantastic idea. Why does this warm towel smell like vinegar and chloroform? Ladies love my sweaty balls. No, they don't, Godfrey. You take that back. They use my plumbing as the metric for those little trees you hang on your rearview mirror. Why not ask for the STD list at the bar? That's awkward. Although I did have someone just straight up tell me one time. The Gherk plays in the big leagues of NYC. There's a lot of cross pollination going on in that small town. I made them stop the pumps with 4650Cs. AJ, I hate to tell you this, but your decisions don't affect the market. As long as it's not a permanent STI, I'm down. Antibiotics are cheap, and I like the burning. All right, popcorn. I go upstairs, clean up, make some lunch, and we're still talking about this. I can't wait until it's 2 p.m. I just go whatever direction the chat goes. The chat went towards genital warts. Here we are. Hey Greg, if Powell is neutral dovish, how high can we pump? 46.75? Maybe 80. Just received my 20% bonus at work. Ask me anything about how to do just good enough of a job to keep the day job. Did he go upstairs to check for warrants? If I were a finance minister for a small country, I would stream Pi-Fi all day for advice. Are you trying to say that I should move to Venezuela and apply for a bureaucratic position? And then stream all day? I could run their central bank. Just making casual conversation. Have you ever had a fuzzy navel or gonorrhea? Chips ahoy, Gherk. Just joining for the day. Did Beyond chat for real, or just a little bit? Just a little bit of sharding. Next 2 days, I think. I'm never dating again. This has been wildly unappealing. What do you want? I live in New York City. It's dangerous here. I don't have the luxury of, dating the same 15 people I knew in high school for the entirety of my life like you do in the Midwest, Gen. Real question in the moment. How do you know if you're buying the dip or catching the knife? You don't, that's why you said a stop. Can you explain the SPX vertical spread? I'm too poor to do anything like that, but I would like to learn. Which one? This one? This is just, it's a 4,600, 4,500 spread if we go down over the next 2 weeks. This would benefit from that. It allows me to buy 15-day options without having to worry too much about theta decay. I'm sure Dr. Gingerballs smells good. No, the worst. He likes his own stank. Ew, I do not. Do not what? Fuck, that hurts. As I work with people I went to school with. I'm sorry. I've never seen a person I went to high school with again after high school, except by choice. Not even accidentally. It's amazing. Did you get out of your 4650 spread clean? Yeah, I mean, I didn't really want to close them, but I did. Not the greatest fills, but like it was okay. I didn't have any problem getting them filled. I just wish I had the opportunity to hold them longer. You know what I shouldn't have done? I probably shouldn't have gotten them for Friday. I probably should have gotten them expiring today. Do not date people from high school. I do not date within a 30-mile radius. If it doesn't work out, they need to be far away. I don't go on dates. How do you get a guy to travel 30 miles? Damn, John. You're fucking putting out the fire on Tinder. I wouldn't drive 30 miles to fuck the hottest woman in the world. That's too far. That's like another state. Actually, where I live literally is. The last guy was 40 miles. You're getting some. These men are desperate as shit, Gen. I mean, I'm sure you're slaying it, but that's really far. That's a commute. That means to establish any kind of relationship, he needs to move closer. What if it does work out? You know what? I think you're trying to. I think you're trying to avoid finding love. Hmm. Look at you judging me. My heart's open. You're putting up all these barriers. It's the Midwest. Sometimes you've got to drive 30 miles to get gas, much less Nikki. Is that why you guys all get married? So you can get your gas at home? I mean, that works. So even if JPAT is dovish, as long as he says no rate cuts, should we go down? Yeah, ideally. As long as he doesn't promise 4.5 rate cuts next year, things should be moderately bearish. Maybe he just comes out and cuts rates, and then the market can crash. He's like, you know what? Mission accomplished. Pulls out the banner and like rides up to the podium on a US destroyer, you know, and he's just like, "We did it, guys. We got him." And then confetti, and then he's like, "We're gonna cut rates back to 2%," and then the market just crashes. I'd actually like that better. Hey, now we've all found all the love we need in our glorious cult leader. Thanks, Pterodactyl. Not a cult, legally. I thought only child predators drive 45 minutes for hooking up. You got a population density of 75,000 people per square mile. You've got a lot of options and walking distance. Yeah. I've got a lot of options in my building. There's like fucking 1,600 people in this building. That's like more than most towns. Beyond hit 10% down. No more shorting, right? Oh shit. No, that doesn't stop shorting. We've all found love in VWAP. Beautifully said. I would drive 30 miles if an air raid signal went out that Rachel McAdams and Kate Beckinsale were together in a room within sniffing distance, ready and willing. What about traffic? Like, what if you had to take the 405 during rush hour? You'd just be tired by the time you got there. You should just ride in on a giant hawk, then just stare at everyone and not say everything. The hawk takes a dump and then he flies away. He just comes out with a falconry glove on, makes like a bird noise and holds his arm out. God, I wish our government was more absurd. I really do. I'd enjoy it more. The facade of professionalism is just a waste of everyone's time. Did you try all the options in your building? No, you don't. You don't shit where you eat. Is X just ripping due to Elon Musk possibly buying it out just for the ticker symbol X? No. At least I don't think he's doing that. I would travel for at least 2 days. It takes about 2 days for you to get here. Yeah. Thanks, JFresh. I made the falconry joke yesterday and no one noticed. Idle Hands, Jessica Alba. Ooh. Damn. That was, yeah. Oof. Is your building shaped like a genital wart? No. There was a time when the government was absurd. Volker. That wasn't absurd. That was genius. You sacrificed the economy to preserve the dollar. We were in a goddamn Cold War, you fucking hippie. Also from Germany to Colorado for meet greet. What a waste for some action. Jesus Christ. That's like 17 hours of flying. At least. Do you have a preferred income strategies for smaller accounts? I don't want to get caught out on a big correction selling CSPs. Condors on stocks. More stable ones, ideally. Things like Apple and shit. I do remember it'd be a foreshadow of SPX. That'd be cool. Breadth and small caps falling back is not a bad sign for the things we want to see. Are you comfortable buying Tesla puts yet? Yep, already did. Yeah. Got a little bit of a stop on them, but yeah, I like the breakdown at 230. Makes me happy. I wish members of the Senate would go back to dueling to settle disputes. Yeah, but they can't most of them can't hold the guns up. Or they just shoot someone else because they forgot who they were fighting in the first place. I'll just douse my building in vinegar and see if it turns white, Dave. Closing any cover calls before the meeting? No. Selling condors? Yeah, you can sell condors. You can do things like this. There. Yep, that's the wrong one. See? These are fun. This would be short. Yeah, this is selling. Would Tesla 225p for next Friday work? You know, Thunder, I thought you weren't going to play Tesla anymore. And Lily. Because you make money and then you somehow don't leave with money. Minimum time between hookups? Well, I'm kind of fat, so 72 hours before the next opportunity pops up. Sometimes like 100 hours. Really just depends on the season. During the winter, it's more aggressive. Summertime, it slows down. When I was in better shape, it was more frequent. That's how I know I've gotten fatter. But it's okay. I'm going to start padding that by making myself appear rich in my Tinder photos. And that should improve the rate. Can someone update me on Beyond? Yeah, Beyond can still run, but the next couple of days, today and tomorrow, have very little forced covering. It's called a cooldown period. You're gonna rent a Lambo? No. Might buy one if the market crashes before the end of the year. At least you're tall. You can carry the extra better. That's true. Yeah. You ever roll the legs of a condor to capture a bit more premium? Yeah. Yeah. When I a long time ago, I used to roll them in. So I'd sell them really wide and then roll them in as it approached expiration. What widget is that on the top of your WeBull layout? Order entry at the bottom. Hold on. Where? This one? Or this? Trade? This one? The widget on the bottom of your WeBull layout. This. That's what you're talking about. That's just the order entry. Yeah, this is just so like if I pull up like a contract, it goes there, and I can adjust it from here. I have it there so I can like look at the chart while I'm, or at least that was the idea. I don't know if I ever actually use it for that, but it's a good point, Yaga. I got carried away with myself. Would you add to the Beyond position at this price? If it drops back to 9, I might add to my Jan position. Otherwise, no. I'll just wait till it starts moving again. If you have a bit of theta, you might be okay. Is SPX gonna fill the mini gap from this morning? Maybe. Renting a Lambo is one of the most Persian things you can do. I'm not Persian, so. Ironic that it's an Italian car, but. Pepino Hermoso, Kendro, I'm here with a PSA. Why don't you put socks on before underwear to avoid transferring foot fungus to your tuna tank rusty sea dragon? Also, one must always sample sniff when Team Cream is on the scene. Well said. What stock can I play that I haven't been attached to yet? Google or Microsoft? Maybe. You just gotta mix things up, because you make money on something and then you get psychologically attached to doing the same thing on that asset. Like Palantir. Like, you shorted Palantir, you made some money, and now you're like, I'm gonna short Palantir again. Don't be that guy. Chances Beyond breaks even by end of day? It could. Will that only happen if JPOW caves on normal rate increases? No, it could just turn around anyway. There's a lot of call interest at 10. I shorted Palantir again, you son of a bitch. See, that's my point. That's what I'm talking about. Don't do that. Step back, reassess. You probably made the right choice. Actually, you probably just got out of your initial position too early, but mix it up. It's gonna be a long day, isn't it? When does forced covering start for Beyond? That's a good question. Well, it has forced covering every day. There's just not a lot of forced covering today and tomorrow. However, when it's above gamma neutral, you run, and if you don't have exposure, you run the risk of it running above delta neutral rapidly, right? And then if that happens, it can keep running. But the majority of the forced covering, like the higher numbers of FTDs, start happening on the 18th out through the end of the month. Positionally, do you think SPX finds its way back to 4650 for the press release? It could, but it's not worth playing. Maybe if you're going to take some other kind of position against that. Otherwise, I would say dealer delta is pretty flat across the whole day. Yeah, I mean, we could. There's nothing really pressuring us down here. But I also don't think anything's really being added to the upside to like reverse momentum very hard. So it's probably not worth trying to play it. Even if it could happen, it could end up being too slow. Like, it's just shit. Are you doing a 0 DTE strangle on SPX in the meeting? Not yet, no. I can't wait to play Cat again. Your calls are so good on that stock. I wasn't able to capitalize as much off the last one, so I'm gonna get more theta next time, but it wasn't wrong. Yeah, it took a lot longer than I had anticipated, but that can kind of be an issue with Cat. I still don't like the current range. It's been doing okay. It got stuck around 55 for a long time, and but it doesn't look like it's gonna pick up any serious momentum anytime soon. I think if we see the favorable expected rate environment deteriorate, it'll probably come back down again. However, I don't want to short it. I'd rather just short Dow or something like that. I can't wait to play Cat again. Your calls are so good. And gotcha. I was thinking about when I wanted to enter more downside exposure. Okay. I mean, think about our ranges, right? If you're trying to position for all of this, you have some very important levels, right? You have 4650 to 75 on the upside. And then you have resistance at 40, 25, and 4600 to the downside. So, I mean, theoretically, given that we're, right here, you could hedge the upside between like 50 and 75, and then you could wait to confirm a breakdown of 4640 before, targeting like this 25 4600 range. Because like if we lose 40, it's very likely we'll continue to fall. So I don't think you need to overexpose yourself. I mean, the only reason you would have to is if we gapped down really fast. If I buy Beyond Meat, will it make my cooch cork bigger? Asking for a friend. No. No, it won't. Holy moly, Kendra's back. Yep. Ugh. I wonder if I could one DT hedge the upside. God's not cheap. Welcome to Costco. I love you. Thank you so much, Deep Fried Pickle. Awesome. My upside is hedged, and my current downside is a cheap spread I picked up yesterday. So that's what I was thinking. Thanks, Pickle. No problem, man. Hmm. Hmm. I have 0 day trades till tomorrow. In a dream, I'm gonna buy nothing, still lose money because I'm just that good. Alright. Hmm. So I got 2 hours. All right. I'll be right back. Give me 1 second. I'm gonna grab something to eat real fast. Oh, fuck, what happened? Did we fill the gap? We did. Have you seen the giant meatball IKEA is selling? Feeds 25. They want people to replace it for ham turkey this Christmas. Anything they don't sell will be made back into sponges. This can't be a real thing, right? I mean, I assume you're joking. Holy fuck, it's a real thing. It's vegan friendly. That looks so unbelievably disgusting. Ew. Is that why Beyond is down? Jesus. Can I chase today? I guess you could if you want to. Don't worry, Gherkin. They have plant balls and veggie balls too. How exciting. That's what I always wanted. Hmm. Would you take profits on puts now? No? I mean, are you like intraday trading this shit? You could if you want. There's a resistance at 40. Stream card, IKEA meatball, downhill run, SPX 3600. All right, boys. How many rate cuts are we gonna get? I think 1 or 0. It seems like the market might be a little scared of what J-Bow is gonna say. I think this might just be an effective volatility going up and the market maker no longer needing to keep the hedge higher. Right? The market maker's just gonna dump they're gonna dump they're gonna dump their hedge as vol goes up. IP watched your stream and stole your giant meatball idea, apparently. All of the market participants running Indiana Jones style of the meatball. That's a shit ball. This feels like more market commentary. It won't happen, but imagine the fireworks if J-Pow decides not to be a cuck today. Well, here's what I'm thinking. I'm thinking J-Pow could still be a cuck and frighten the markets. And that's his favorite position to be in. What the fuck is CCCCC? Jesus fucking Christ. That's a short squeeze. That's what that is. Some short is getting blown the fuck up. Holy shit, I remember like 2 years ago, there was like some penny stock dude that was trying to get everyone to buy this. That dude might still be underwater though. Look at institutional ownership. Is it high? You can say that literally about like every like shit penny stock. I mean, I'm glad you're in it. Well done. I'm not gonna chase it. It was $50 2 years ago. Yeah, he's underwater. Ouch. Brian Collins might have like 100 shares or 500. Brett. Do you ever remember the name of that fund that like did really well at the beginning or the end of 2020? Who was just like long dollar stocks? Like they just owned like 20,000 shares of every penny stock. That was their strat. No, not Archegos. Best flavor instant oatmeal. Brown sugar and apple cinnamon. Cat puts or cat calls? Neither. I don't know. I wouldn't play cat right now. The options chain's been kind of deteriorating a bit lately. You know, Beyond's doing surprisingly well today. I don't think he's going to hike. I really, really doubt it. SGX is down 0.1%. Will there be a markets in peril special tonight on CNBC? Maybe. Any neutral positioning still rolling in before JPOW? Or is it all kind of set up already? There's been, I mean, there's positioning coming in, but I don't think anything's really shifting too much. There's been a bit more call selling, obviously, as we move down towards the 46.40 end. I wouldn't say there's been a lot more call buying, though. Honestly, if JPOW hikes, the market might rocket. What hike equal rocket? Why? Everyone will want to de-risk. It's not expected. Also, if they hike, they push the pair trade with yen further apart, right? So they can leverage it up. Yeah, leverage it up and recall shares. Netflix wasn't having a good run this week. It just had an insane run this morning because they released a bunch of user data metrics. Given this, win this, then this. What do you mean? I already said, like, if they hike rates, it pushes the spread on the carry trade apart. So they can leverage into it harder. And then they can recall shares before letting the market dump. Not that there's a lot of short interest left anywhere, but there's still some. He has no time for kikes next year with all the cuts lined up. I've straddled beyond for FOMC. Interesting. Okay. Congratulations, Jeff. So best bear outcome is pause, hawkish tone, dot plot showing 0 cuts in the near future. Yeah. That's the most likely bear outcome, too. So hike equals pump, halt equals pump, cut, halt equals pump, cut equals crash. I mean, if they cut rates, yeah, the market would probably crash. Depends how hard they cut them, but markets are actually wildly inefficient. I've never you know why economists like to say that they're efficient? Because then they don't have to think about them too much. So in academic structure, if you assume that markets are always 100% efficient, then you don't really have to dig into them that hard when basing your analysis on them. Except they're not, right? They're absolutely not efficient. They're liquid for the most part. I already wrote about Beyond on Twitter. Tankerific. Go look at it. It's not over. Well, I mean, it was doing surprisingly well given the fact that it's down 8%. It hasn't lost the put wall at $9, but it opened below gamma neutral today. So bears on it got a foothold. There's not a lot of force covering today. I already talked about this like 900 times. And yes, it's down 8%, but it's still up 30% week over week. Does the dot plot get released right at 2 p.m.? I think so. No. He'll bring it up during the presser. But the summary of economic things will come out. You just won't have like the detailed one until the minutes are released. The SEP. Tesla slipped 230, so I picked up some short positioning on it. Not a lot, but a little. That's about it. Are you gonna start posting more actively on Twitter with pics? I can see you're already regretting it. So I was getting a lot of like questions on Reddit already about Beyond. So I just posted it there so it would answer as many questions as possible without me having to post it in multiple places, right? But yeah, I already do regret it. There's nothing worse than the public. Quite a lot of range for tomorrow. I think if JPEG is sufficiently hawkish, things could turn bearish quite quickly. Are you rewriting what I wrote? pre-data reminder? I'm gonna tag you. I just told my buddy about at work about Beyond. He's a total degen, so I had to tell him. Well, make sure he's a degen that likes theta. At the money calls and puts are bigly different. Puts double. What mean? What? Have you ever met a degen that likes theta? Nope. Repeating something back to someone they said earlier is a sign of schizophrenia. That would explain a lot. The fuck? I'm straddled. Let's boogie. Any out of the money strangle strikes to keep an eye on for the pump to save mission is bearish. Any out of the money strangle strikes. 50 and 60? Yeah, the upside, I assume. This will move in both directions. I don't even know which direction will stick. It may not move in both directions. Have you seen the interview with Chris Cuomo and the girl with Tourette's syndrome? I'm not trying to be mean, but it's pretty funny. She flips him off and tells him to fuck off. He starts laughing. That's awesome. Hmm. And fucking calls are overpriced. Um, Still got 14 minutes left. Where the fuck isn't this filling? How are you positioned for JPOW? Well, I used the high earlier to get some downside exposure via debit spreads. I had some shorter dated debit spreads on the call side. I might I might add some like far out of the money puts just in case. I think I'm pretty. Oh, I saw my straddle from last night, so I think I'm pretty well covered. And the call side of the straddle is already in the money, so I don't think I have to worry about it slipping or not that much. The real question is, have you decorated for Christmas yet? No. Real tree or fake? I have a tiny tree in storage. Do you have any thoughts on IEP? I don't like it very much. I'm not a big fan of having other people invest my money for a small kickback. If I was going to do that, I'd just go to a hedge fund. And IEP still has problems with its NAV that are unresolved, despite the short interest kind of falling off. Also, being moral realtor thing is not working out so well. I can lose my own money, thank you very much. Exactly. The answer should have been yes, you are finished decorating. All FOMC Fed announcements need to be conducted in Monday pre-market, so we don't have to deal with these days dragging on. I would love that. You ever think about investing in hedge funds in other countries that have much less regulation, allowing said hedge fund to print more money through manipulation? Yeah. That could be cool. There's more than 52 likes. Beyond trying? I mean, I kind of respect that it hasn't lost $9 yet. That's pretty good. Whose economy is going to get worse? China or the US? China. China's fucked right now. I want to play this economic event on God mode. I don't listen or watch the presser or look at the data. Just pure chartage? No. I don't want to fucking do that at all. Hmm. Pfizer down 8%? Huh. Did you buy any lottos? Not yet. But I kind of want to. I'm just not sure which lottos. Probably these. Mm. Hmm. Please remove stops from positions around FOMC to escape whipsaw. Risky, though. Yeah, it can be. We got about 5 minutes. My puts and calls are green. Am I doing this right? For now. 46.55 is gonna be $30 in the money. Let's go. I've never seen zero DTEs this expensive in all of my 3 months of trading them. Really? These are cheap. These are very, very, very cheap. 5 minutes until the guaranteed market crash. $38 an hour. 741 in the chat. Alright. A lot of numerology things going on here. Has Mike been talking to you guys? Is there a consensus on JPOW? A poll, perhaps? No. No. We don't make predictions on the chaotic system lest we change the outcome. I say blue tie today. I'm gonna go with purple. Gray? Red? Oh, never. I wonder if he owns a mauve, like a mauve tie, like a tan, like a light tan. Hot pink. I would say pink, purple, or gray are probably the most likely ones. No tie, popped collar. Jesus, man. Tie with Santa print. He's going Ascot for sure. Yes, no on mentioning Janet by name, or if he just calls her the treasury troll. This is a fashion channel, not a financial channel. That's correct, Exonuma. Shower thoughts. JPOW hawkish. SPX 4800 on OPEX +2. While they sell underlying and buy cheap puts, crash into Christmas. You can make up any number of theories in your head, all of which could be wrong. JPOW for sure just casually strolling out in a gnarly old dead shirt with dancing bears. Oh, he can't throw signals that strong. Super short shorts and sport coat, yacht club style. Ooh. What about a yellow sweater? Like a yellow cashmere sweater strung about his neck? Maybe, yeah, maybe, you know, maybe he goes khakis, boat shoes, and yellow cashmere with a light blue button up. Hmm. If only this were the 60s. Glasses or no glasses? iPad or no iPad? That's the real question. Here it comes. Very close. Eye patch or no eye patch? Markets would tank if he came out in cashmere. There's way more than 39 likes. You guys gotta refresh the stream. There's like 300 likes, which is still embarrassing given the amount of people in here, but I'm not a likable person, which I understand. Okay, the initial reaction, extraordinarily bullish. How high can that pump? Hold on. Let's keep going. Dear God. All right, let's see. Projection materials. I'm still looking at getting core PCE down to 2% by 2026. They're projecting a median federal funds rate for 2024 of 4.6. GDP in the longer run under 2%. Unemployment rate still projected to rise above 4% through 2024 and hold until 2026. There's a slight drop in expected federal funds rate for next year from 5.1 to 4.6. With the median rate dropping to 4.6 next year. PCE inflation. Average error for 2024, 1.7 in GDP. Unemployment rate 1.1. Short-term interest rates 1.4. So the margin of error gives them 4.6 to 6% for next year for the federal funds rate. Oh shit, I maxed out the fucking call spread already. Well, that was cool. Alright, let's see. I gotta go back. So there are some cuts, some additional cuts. Or at least projected cuts. Committee seeks to achieve maximum employment, inflation at a rate of 2% over the longer run. Support of these goals, committees decide to maintain the target rate. Blah, blah, blah. And assessing appropriate stance on monetary policy, the committee will continue to monitor the implications of incoming information on economic outlook. Okay. Minimum bid rate of 5.5. Rollover auction. Principal of MBS. 35 billion a month. Primary credit rate at existing level of 5.5%. Okay, so nothing really in this statement. No rate hike. So 3 cuts next year? Yeah, it looks like it. Well, 2? 2 cuts next year? Yeah, it looks like 2 cuts next year. The majority of participants are set at, well, actually, even 2 cuts is a stretch. It may just be 1. There's like 4-8 and 4-6. It's kind of split. The majority of participants are 4-8 and higher. Right? That's 5, 6, 7, 8. And 6. Oh no. 11 below. Wait, is that 5? 9, 10 below? I guess it's like 9 and so 8 above 4-8, 9 below 4-8. I gotta zoom in on that. No, 10 below 4-8. 8 above 4-8. So what mean there could be 2 rate cuts next year? Maybe 3. So never buy a put again? Got it? yeah, USD JPY is doing things. Well, I'm bankrupt. Would you just wait for him to start talking and relax? Well, I see now why the market doesn't go with what the Fed say. Inflation's gonna get so bad. Well, I mean, they may not cut rates. Interesting that they would price in the optimism of it, though. It's still, the market had 4.5 rate cuts priced in. This is 2, right? This is still. I'm glad I averaged down on beyond calls. Nice. Are stops up now or waiting for JPOW? I'm waiting for JPOW. I have stops on my straddle because I don't think we'll go a lot higher than like 46.75, but my call hedge printed. Now I need to pull back. What a terrible year to be a bear. Eh, it was alright. All the news saying 3 cuts next year. Not arguing, just saying that's the rhetoric. It could be 3. I mean, yeah, they're gonna lean with the slight majority edge. But it's like 2.5, let's say, realistically. That's still less than the 4.5 that were priced in. Will Bulls not max out this momentum? I mean, they kind of are, right? This is kind of this is them maxing it out. My Oxycall is going complete nuts. Nice, man. I'm going to sell 46.75, 46.80. No way I could ever hit 4,700, right? 4,700 right now is a bit of a stretch. It could, but it's... We need to start seeing, like, spot up, vol up, and we've got to see short calls getting squeezed, and I don't think there's that many short calls above 46, like, 80. So that still leaves that range from 46.75 to 4,700 that's very weak. I must have missed that time they did half a rate increase. What do you mean? We're at 5.25 to 5.5 right now. We've been there forever. You give Houston enough credit. That's how I found you. Well, that's because he talks about insane things. And bandwagons with conspiracy theorists. What could JPOW know that you don't? Or is he just preserving his post-Fed job opportunities? I mean, JPOW's not the only voting member of the Fed. For all you know, JPOW's the one vote that wanted to pin rates, right? He guides the discussion and stuff, but he doesn't choose the decision. IWM puts, or is that off the table now? I'm not sure. The market still needs to price in fewer rate increases or fewer cuts next year. Is there still potential for this to get rugged today? Yeah. Yeah. So since they're going to start cutting rates, is now a good time to buy a house? They haven't cut rates yet. But if financial conditions ease enough, maybe. USD JPY is getting a little crazy, Dork. Yeah, it is. Ooh, nice. The bond market is doing a thing. That thing is not pricing in less cuts at all. What if there was a massive short position on US Treasuries? Credit crisis it is. Sounds like it, yeah. Tell me the future, Stock Daddy Gherkin Pow. We'll see what J Pow says. I forgot that pricing in 200 bips of rate cuts means pricing in the collapse of the carry trade spread. Whoopsies. They didn't even price in 200 bips of rate cuts. They priced in like 50. There's like 50 bips of rate cuts. The bond market's doing the opposite of what it should be doing. A 10-year yield is literally crashing. What happens if Japan's rate goes above the Fed rate? Then yen would move above the dollar? Maybe? Well, probably not, but it would move much closer to the dollar. How long conservatively do you think it is before SPX is at this level and actually worth the price based on underlying companies? Like 3 years? We need like 3 years of pretty consistent growth and no economic issues whatsoever. Maybe even 5 in some cases. But the Mag 7's ridiculous, but the rest of it's not too bad. Two cuts on the table means price in 6.5 cuts instead. You think JPEL will slam this with this speech? I mean, I kind of think this is the upper bound of like where price action can really go today anyway, without some serious repositioning. So I put stops on my straddle calls already. They're not super tight, but they're tight enough that if it pulls back, I'm gonna get stopped out. Spy hit all-time highs by a few cents. Or did it just like wick up really hard? No, it didn't. All-time high on Spy is like 480. JPEG's gonna have an old man moment and get too excited about something again. Maybe it'll be like something beneficial though, like Volcker. People need to stop hoping JPEG saves their puts. Yeah. Calls were even cheap before this. What the fuck? Nobody hedged the upside at all. I think people did. I think plenty of people hedged the upside, but some people definitely didn't. I'm sure there's people that didn't hedge the downside either. But that's the way it goes. Climate protesters? Yes or no? I don't know. Not in Washington. WeBull showing all-time high at 467.13. Are you gonna argue this with me? The high on Jan 3rd, 2022 was 479.98. I mean, can't you just fucking zoom out on the chart instead of having this conversation? I'm not arguing with you. Weeble's stupid. I don't know what to tell you. Repeat after me, Gherkin. All-time high. He's looking at the 52-week high. Oh. Where's it to a different high? Is it dividend adjusted or I don't think no, it's not the time frame, I don't think. Oh, it is. Okay. Well, no, it's not the time frame. That's weird. Yeah, I don't know why it's doing that. Hmm. Doo-doo. Not a lot of out of the money call interest coming in above 75. Actually, it looks like there's some call selling going on here to the upside. What's that? Oh. Nice, PMG. Well done. Pixie calls Pront, you sorcerer. Is JPEG going to bring this back to reality? Is it bull season until next year? I don't know, but I do know that they're not pricing in rates appropriately at all. The US 2-year is already down below the Fed projection of 4.6 in the longer run at 4.52. That was the data I was expecting. This is not the reaction I was expecting. Well, it's interesting. We'll see how much of it's just like a blow off, right? Some of it could be. Nice 13K realized profit already. Well done, man. Now let's see if this put gains some value back. No problem. You're welcome, man. SPX was the MOASS all along. It usually is. Anyone know what the over-under on AI cat peener protesters being at the JPOW meeting? Moronic to short the euro into tomorrow. Could be. JPEG quickly revising his speech to say Volker 72 times. SPX up, VIX up, UVXY up, USD JPY down, down. What an efficient market. I wonder if institutions will look to take some yearly profits here. It's possible. Moronic to go long volatility today? No, I don't think so. I mean, the market maker would already prefer that we close lower than this, right? Yeah, the market maker would... That's interesting. Huh. I guess back below 46.30? That widened out a lot. 4,700 doesn't look so far, yet it's miles away. They still need to buy a lot of out of the money shit in order to push us up to 4,700. GME's not MOASsing. It's up fucking 80 cents. Relax. Oh man, I feel like JPY is gonna rug pull us soon. It's kind of fun, huh? JPY back under 144 already. It's just chugging along. It's like 150 more basis points to get below the local low from when it squeezed a bit the other day. There's so many fucking yen shorts too. If that really starts moving, like if it gets under like 130, it's gonna get crazy. Jimmy is going to 22. Is there any way SPX finishes red today? Sure. Yeah, it could happen. You streaming Pow Pow? Yeah, I think we got a couple minutes though, right? Ugh. Where the fuck did I put that? Why were you excited when it was high? Because it was pressuring the Bank of Japan and the Ministry of Finance to take steps in order to improve the value of the currency. Now I'm excited because it's dropping enough that it could squeeze yen shorts. Yield curve is doing wonky stuff. Yeah, it is. Fed, okay, maybe 4.6 by 2024, end of year. Market, okay, so 4 to 4.25. They're selling puts at 7,800 for August, or buying them. Look at Jamie 27C's weekly. Who gives a shit? They could buy all the 27Cs in the world. It doesn't mean it's going to go there. If anything, there's probably someone's just selling them to capture the vol. There's like no delta on that contract at all. No problem. The 2 to 10 is inverting more? Ha 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 ha. Yeah. It's all fun and games until something breaks. JPOW feed on pause? Oh, is it? Son of a bitch. Is it alive? Oh.
Downward pressure on economic activity and inflation, and the full effects of our tightening likely have not yet been felt. Today we decided
I missed him say his introductory remarks.
to reduce our securities holdings. Given how far we have come, along with the uncertainties and risks that we face, the committee is proceeding carefully. We will make decisions about the extent of any additional policy firming and how long policy will remain restrictive based on the totality of the incoming data, the evolving outlook, and the balance of risks. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has slowed substantially from the outsized pace seen in the third quarter. Even so, GDP is on track to expand around 2.5% for the year as a whole, bolstered by strong consumer demand as well as improving supply conditions. After picking up somewhat over the summer, activity in the housing sector has flattened out and remains well below the levels of a year ago. He's just saying the same shit
that's on the...
Largely reflecting
Don't
higher
worry, you haven't
rates.
missed anything.
Higher interest rates also appear to be weighing on business fixed investment. In our summary of economic projections, committee participants revised up their assessments of GDP growth this year, but expect growth to cool, with the median projection falling to 1.4% next year. The labor market remains tight, but supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 204,000 jobs per month, a strong pace that is nevertheless below that seen earlier in the year. The unemployment rate remains low at 3.7%. Strong job creation has been accompanied by an increase in the supply of workers. The labor force participation rate has moved up since last year, particularly for individuals aged 25 to 54 years, and immigration has returned to pre-pandemic levels. Nominal wage growth appears to be easing, and job vacancies have declined. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. FOMC participants expect the rebalancing in the labor market to continue, easing upward pressures on inflation. The median unemployment rate projection in the SEP rises somewhat from 3.8% at the end of this year to 4.1% at the end of next year. Inflation has eased over the past year, but remains above our longer-run goal of 2%. Based on the Consumer Price Index and other data, we estimate that total PCE prices rose 2.6% over the 12 months ending in November, and that, excluding the volatile food and energy categories, core PCE prices rose 3.1%. The lower inflation readings over the past several months are welcome, but we will need to see further evidence to build confidence that inflation is moving down sustainably toward our goal. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. As is evident from the SEP, we anticipate that the process of getting inflation all the way to 2% will take some time. The median projection in the SEP is 2.8% this year, falls to 2.4% next year, and reaches 2% in 2026. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We're highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. As I noted earlier, since early last year, we have raised our policy rate by 5.25 percentage points, and we have decreased our securities holdings by more than $1 trillion. Our restrictive stance of monetary policy is putting downward pressure on economic activity and inflation.
No, it's fucking not.
The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25 to 5.5%, and to continue the process of significantly reducing our securities holdings. While we believe that our policy rate is likely at or near its peak for this tightening cycle, the economy has surprised forecasters in many ways since the pandemic, and ongoing progress toward our 2% inflation objective is not assured. We are prepared to tighten policy further if appropriate. We're committed to achieving a stance of monetary policy that is sufficiently restrictive to bring inflation sustainably down to 2% over time, and to keeping policy restrictive until we're confident that inflation is on a path to that objective. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. While participants do not view it as likely to be appropriate to raise interest rates further, neither do they want to take the possibility off the table. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 4.6% at the end of 2024, 3.6% at the end of 2025, and 2.9% at the end of 2026, still above the median longer-term rate. These projections are not a committee decision or plan. If the economy does not evolve as projected, the path of policy will adjust as appropriate to foster our maximum employment and price stability goals. In light of the uncertainties and risks and how far we have come, the committee is proceeding carefully. We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook for economic activity and inflation, as well as the balance of risks. In determining the extent of any additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thank you. Chris Rugaber at Associated Press. I wanted to ask, how should we interpret the addition of the word any before additional firming in the statement? I mean, does that mean that you're pretty much done with rate hikes and the committee has shifted away from a tightening bias and toward a more neutral stance? Thank you.
So specifically on any, we do say that in determining the extent of any additional policy firming that may be appropriate, so any additional policy firming, that sentence. So we added the word any as an acknowledgement that we believe that we are likely at or near the peak rate for this cycle. Participants didn't write down additional hikes that we believe are likely, so that's what we wrote down. But participants also didn't want to take the possibility of further hikes off the table. So that's really what we were thinking.
Mr. Chairman, the microphone, sorry. Steve Leisman, CNBC. Happy holidays, Mr. Chairman. Fed Governor Chris Waller said that if inflation continues to fall, then the Fed in the next several months could be cutting interest rates. I wonder if you could comment on whether you agree with Fed Governor Waller on that the Fed would become more restrictive if it didn't cut rates if inflation fell. Thank you, sir.
So, of course, I don't comment on any other officials, even those who work at the Fed. But I'll try to answer your question more broadly. So the way we're looking at it is really this. When we started out, right, we said the first question is how fast to move, and we moved very fast. The second question is, really how high to raise the policy rate, and that's really the question that we're still on here. We're very focused on that. As I mentioned, people generally think that we're at or near that, and think it's not likely that we will hike, although they don't take that possibility off the table. So that's when you get to that question, and that's your answer. There's a naturally it begins to be the next question, which is when it will become appropriate to begin dialing back the amount of policy restraint that's in place. So that's really the next question, and that's what people are thinking about and talking about. And I would just say this: we are seeing strong growth that appears to be moderating. We're seeing a labor market that is coming back into balance by so many measures, and we're seeing inflation making real progress. These are the things we've been wanting to see. We can't know. We still have a ways to go. No one is declaring victory. That would be premature. And we can't be guaranteed of this progress. So we're moving carefully in making that assessment of whether we need to do more or not. That's really the question that we're on. But of course, the other question, the question of when will it become appropriate to begin dialing back the amount of policy restraint in place, that begins to come into view. And is clearly a topic of discussion out in the world, and also a discussion for us at our meeting today.
Can you give some color as to the
Damn
nature
it,
of that
rolls up
discussion today?
mission accomplished
Sure.
banner.
So it comes up in this way today. Everybody wrote down an SEP forecast, so many people mentioned what their rate
Was someone
forecast
telling him that
was.
he's breaking the bond market?
There was no back and forth, no attempt to sort of reach agreement, like this is what I wrote down, this is what I think, that kind of thing. And a preliminary kind of a discussion like that. Not everybody did that, but many people did. And I would say there's a general expectation that this will be a topic for us looking ahead. That's really what happened in today's meeting. I can't do the head count for you in real time, but that's generally what happened today.
Go to Rachel.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. At this point, can you confidently say that the economy has avoided a recession and isn't heading for one now? And if the answer is no, I'm curious about what you'd still be looking for.
USD JPY almost down 200 BPS.
I think you can say that there's little
The whole
basis
financial
for thinking
system
that
is
the economy
going
in a recession now. I would say that. I think there's always a probability that there will be a recession in the next year, and it's a meaningful probability no matter what the economy is doing. So it's always a real possibility. The question is it? So it's a possibility here. I have always felt, since the beginning, that there was a possibility because of the unusual situation that the economy could cool off in a way that enabled inflation to come down without the kind of large job losses that have often been associated with high inflation and tightening cycles. So far, that's what we're seeing. That's what many forecasters on and off the committee are seeing. This result is not guaranteed. It is far too early to declare victory. And there are certainly risks. It's certainly possible that the economy will behave in an unexpected way. It has done that repeatedly through in the post-pandemic period. Nonetheless, where we are is we see the things that I mentioned.
No
I'm
covering
curious if
on
you're looking
top.
back on the past year.
A little bit of
talked about
covering on
navigating
beyond.
by the stars under cloudy skies. Can you talk about some of the ways in which the economy surprised you most this year, where you thought it would behave in one way and had to pivot to respond? Thanks.
So I think forecasters generally, if you go back a year, were very broadly forecasting a recession for this year, for 2023. And not only did that not happen, that includes Fed forecasters and really essentially all forecasters. A very high proportion of forecasters were expecting very weak growth or a recession. Not only did that not happen, we actually had a very strong year. And that was a combination of strong demand, but also real gains on the supply side. So this was the year when labor force participation picked up, where immigration picked up, where the distortions to supply and demand from the pandemic, the shortages and the bottlenecks really began to unwind. So we had significant supply side gains with strong demand, and we got what looks like a 2.5% plus or a little more than that growth year at a time when potential growth this year might even have been higher than that just because of the healing on the supply side. So that was a surprise to just about everybody. I think the inflation forecast is roughly what people wrote down a year ago, but in a very different setting. And I would say the labor market, because of the stronger growth, has also been significantly better. If you look back at the S&P from a year ago, there was a significant increase in unemployment. That didn't really happen. We're still at 3.7%. So we've seen strong growth, still a tight labor market, but one that's coming back into balance with support from the supply side, a greater supply of labor. It's that's what we see, and that I think that combination was not anticipated broadly.
Howard.
I'm starting
Thanks,
around
Howard Schneider with,
46.
Reuters, and thanks for taking the questions. I wonder if you could give a little more color or detail on what motivates the lower rates.
Yeah, the tips
next
are
year,
moving a little.
Whether it's a coincidence,
It's
for
at
example,
Gamma
that
Max
the
right
spread
now.
between PCE
So it just
inflation,
jumped right to Gamma
core
Max,
inflation,
but
and the federal
could move
funds
like
rate
$6
stays
more
constant
from
over
there.
the year. Are you simply calibrating against the fall in prices, in the price level that you're in the rate of inflation that you're expecting, as opposed to supporting the economy?
Nothing quite that mechanical is happening. The SEP really is a bottoms up, built from the bottom up, right? So I think people are looking at what's happening in the economy, and I think if you look at the big difference from September in the SEP, the expectations for inflation this year, both headline and core, have come down, really significantly in 3 months. That's a big piece of this. At the same time, growth is turned out to be very strong in the third quarter, is slowing, we believe, as appropriate. And we've had several labor market reports which suggest, again, significant progress toward greater balance across a broad range of indicators. You're seeing so many of the indicators coming back to normal, not all of them. But so I think that people look at that and they write down basically each individual writes down a forecast and a rate forecast that goes with that forecast. We tabulate them and publish it. And so it isn't, you ask about real rates, I take it, that is something that we're very conscious of and aware of and monitor, and it's certainly a big part of, it's a part of how we think about things, but really it's broader financial conditions that matter, and as you well know, it's so hard to know exactly, what the real rate is or exactly how tight policy is at any given time. So you couldn't follow that like it was a rule and think that you would get the right answer all the time. But it's certainly something that we're focused on. And indeed, if you look at the projections, I think the expectation would be that the real rate is declining as we move forward.
It sounds like the discussion over that, if I could follow up, has already kind of begun. I'm wondering, just related to Steve's question, how the tactics of this play out, given the slowing of inflation and the fact that the deeper you get into 2024, the closer you get to a presidential election. Do you want to front load this, in other words?
Yeah, no, we don't think about political events. We don't think about politics. We think about what's the right thing to do for the economy. The minute we start thinking about those things, we just can't do that. We have to think, what's the right thing? We'll do the things that we think are right for the economy at the time when we think is the right time. That's what we'll always do. So I mentioned we're moving carefully. One of the things we're moving carefully about is that decision over, that assessment really over whether we've done enough, really. And you see that people are not writing down rate hikes. That's us thinking that we have done enough, but not feeling that really strongly, confidently. And not wanting
10-year is about to drop below
possibility of a rate hike off the
4%.
table. Nonetheless, it's not the base case anymore, obviously, as it was 60, 90 days ago. So that's how we're
What's it
approaching
going
things.
to take to
And,
break
as I
4,700?
mentioned,
I don't know.
we wrote down this
We're pretty
S&P,
close, right?
and it talks about people have individual assessments of when it will be appropriate to start to dial back on,
Tricky,
on
we're
the
above
tight
gamma
policy we
max,
have in
so it
place.
might
And
be-
that's
might
a
be
discussion
tough to
we'll be
push up
having
higher.
going forward, but that's another assessment that we're going to make very carefully, so as time goes forward.
Nick.
Nick Timmeros of the Wall Street
This
Journal.
is that like low
Chair Powell,
upside
you've argued
liquidity
over the
problem.
last year that policy tightening started before you actually lifted off because the market anticipated your moves and tightened on your behalf. The market is now easing policy on your behalf by anticipating a funds rate by next September that's a full point below the current level with cuts beginning around March. Is this something that you are broadly comfortable with?
So this last year has been remarkable for the sort of seesaw thing back and forth we've had over the course of the year of markets moving away and moving back and that kind of thing. So, and what I would just say is that we focus on what we have to do and how we need to use our tools to achieve our goals, and that's what we really focus on. And people are going to have different forecasts about the economy, and those are going to show up in market conditions, or they won't, but in any case, we have to do what we think is right. And, in the long run, it's important that financial conditions become aligned or are aligned with what we're trying to accomplish. And in the long run, they will be, of course, because we will do what it takes to get to our goals. And ultimately, that will mean that financial conditions will come along. But in the meantime, there can be back and forth, and I'm just focused on what's the right thing for us to do, and my colleagues are focused on that too.
The markets seem to think inflation is coming down credibly. Do you believe we're at the point where inflation is coming down credibly?
Listen, I welcome the progress. I think it's really good to see the progress that we're making. I think if you look at the 12-month measure, look at the 6-month measures, you see very low numbers. If you look at 12-month measures, you're still well above 2%. You're actually above 3% on core through November at PCE. That isn't to say I'm not calling into question the progress. It's great. We just need to see more. We need to see continued further progress toward getting back to 2%. That's what we need to see. So it's our job to restore price stability, and that it's one of our two jobs along with maximum employment, and they're equal. So we're very focused on doing that. As I mentioned, we're moving carefully at this point. We're pleased with the progress, but we see the need for further progress. And I think it's fair to say there is a lot of uncertainty about going forward. We've seen the economy move in surprising directions, so we're just going to need to see more further progress.
Gina.
Gina Smilik, New York Times. Thanks for taking our questions. In the SEP from today, growth is notably below potential in 2024. If growth were to surprise us again in the way that it has for years now by being stronger than expected next year, would it still be possible to cut rates? Or put another way, is below trend growth necessary to cut rates, or would continued progress on inflation alone be sufficient?
So we'll look at the totality of the data. Growth is one thing. So is inflation, so is labor market data. So we'd look at the total, if we make decisions about policy changes going forward, we're going to look at all those things, and particularly about as they affect the outlook. It's ultimately all about the outlook and the balance of risks as well. So that's what we'd be looking for. If we have stronger growth, that'll be good for people. That'll be good for the labor market. It might actually mean that it takes a little longer to get inflation down to 2%. We will get it down to 2%. But if we see stronger growth, we will set policy according to what we actually see, and so that's how I would answer.
I guess the question I'm asking, if you don't mind a quick follow-up, I guess the question I'm asking is above trend growth itself a problem?
It's only a problem it's not itself a problem. It's only a problem insofar as it makes it more difficult for us to achieve our goals. And if you have growth that's robust, what that will mean is probably will keep the labor market very strong. It probably will place some upward pressure on inflation. That could mean that it takes longer to get to 2% inflation. That could mean we need to keep rates higher for longer. It could even mean, ultimately, that we would need to hike again. It just is, it's the way our policy works.
That was the bear signal. The harmonica of doom.
Axios. How do you interpret the state of the labor market right now? And in particular, you've referred even today to evidence that it's coming into better balance. What would you need to see to conclude that it has reached that balance?
So on the better balance side, just a lot of things. It's you see job growth still strong, but moving back down to more sustainable levels given population growth and labor force participation. The things that are not quite, but let me go on with that list. Claims are low. If you look at surveys of businesses, they're sort of the era of this frantic labor shortage.
The market is disregarding all fundamentals here.
The shortage of labor
Time
is
to enter
being
the pain
significantly
trade.
alleviated. If you look at shortages of workers, whereas they thought job availability was the highest it had ever been.
I might start
or
getting
close
some
to it.
longer dated
That's
puts
down,
here.
down to more normal levels. By
Look
so
at
many
fucking
measures,
yields. They're going
participation,
crazy.
Unemployment, so many measures, the unemployment, job openings, quits, all of those things. So wages are still running a bit above what would be consistent with 2% inflation over a long period of time. They've been gradually cooling off, but if wages are running around 4%, that's still a bit above, I would say. And I guess there are just a couple of other, the unemployment rate is very, very low. And these are, but I would just say overall, the development of the labor market has been very positive. It's been a good time for workers to find jobs and get solid wage increases.
Claire?
Kenny's basis trade is getting
Hi,
blown
James,
up.
Financial Times. I'd say the mood among economists at the moment seems to be
Fucking
one
big
of
move
cautious
in yields.
optimism, which is somewhat corroborated by your forecast, by this sense that we are going to have a soft landing. Yeah, when we hear from the general public, there's a lot of discord about economic conditions. What do you think explains this disconnect, and does it matter for policymakers?
It may be. A common theme is that while inflation is coming down, and that's very good news, the price level is not coming down. Prices of some goods and services are coming down, but overall, in the aggregate, the price level is not good. So people are still living with high prices, and that is something that people
Where's
don't like.
CPI annualized in the last 6
what
months?
will
Why would
happen
you
with
only
that
look at the
is
last 6 months?
Wages are now, real wages are now positive, so that wages are now moving up more than inflation.
No
as
one cares
inflation
about
comes
PPI.
down.
First of
And
all,
so
the Fed
that-
only cares
that-
about
that might help,
PCE and supercore at that,
improve the
which
mood
is
of
still
people.
well
But
above
we
the
do see
target
those-
rate of 2%.
We see those public opinion surveys. The thing that we can do
And
is
reigniting the
to
asset
do
bubble
our
is just
jobs,
going to
which is
drive that
to
back up.
use our tools to foster
Even as bullish
price
as you
stability,
are, you
which
can't
has such
disagree
great
with that.
benefits over such long periods of time.
Kill
and
the
which is thing
dollar
that really
oil
enables
rockets.
us to work for and achieve
End of story.
an extended period of high employment, which is so beneficial for families and companies around the country.
Victoria?
Hi, Victoria Guido with Politico. I wanted to ask,
Oil rocketing works for me.
on the flip
Doesn't work
side
for
of
inflation.
if things start to deteriorate rapidly, if we do fall into a recession, if we do start to see unemployment rise at sort of the levels of inflation that we're seeing now, how would you all think about that in terms of rate cuts? Would that be a sign that you've done your job demand-wise?
Sorry, if
If the economy looks like it's starting to fall into recession, if the jobless rate starts to rise?
that's not something we're hoping to see. Obviously, we're hoping to see something very different, which is continuation of what we have seen, which is the labor market coming into better balance without a significant increase in unemployment.
SPX MOASS,
Inflation
10 to
coming down
15%
without a
above
significant
Gamma
increase in
Max
unemployment,
price target.
And growth moderating
Yeah, I don't
without a
think
significant increase in
SPX
unemployment.
can
That's what we're-
actually
we're
go above
trying
its
very
Gamma
much to
Max, but
achieve.
that's out at like
And, not something we're looking to
47,
Would you
50
take that as a
something.
signal that you should cut rates?
It's already above the Gamma Max
Obviously,
on the
what we'll do is
weekly
we'll look at
side.
the totality of the data, as I've mentioned a couple of times, and certainly the labor data would be important in that. And, if you can describe a situation.
We tested
like that
the
where
monthly
if there were the
Gamma
beginning of a
Max back
recession or
in
something like that, then yes, that would
July.
certainly weigh heavily in that decision.
Michael McKee from Bloomberg Television and Radio. Mr. Chairman, you were, by your own admission, behind the curve in starting to raise rates to fight inflation. And you said earlier, again, the full effects of our tightening cycle have not yet been felt. How will you decide when to cut rates, and how will you ensure you're not behind the curve there?
So we're
This
aware of
fucking
the
guy.
risk that we would hang on too long.
I can never
we
tell
know
if
that
he
that's
has
a risk,
calls or
and we're
puts.
very focused on not making that mistake. And we do regard the two, we've come back into a better balance between the risk of overdoing it and the risk of underdoing it. Not only that, we were able to focus hard on the price stability
Everyone
mandate,
knows Upstart's
and we're getting
moving.
back to the point
it
where,
hit Gamma
which is
Max.
what you do when you're very far from one of them.
It's got
one of the
about
two mandates.
$6 of
You're getting now
range.
back to the
Anything that
point where
happens
both
after
mandates
that has to be due
important,
to
and they're more
increased
in balance
buying.
too. So I think we'll be very much keeping that in mind as we make policy going forward. And the things we'll be looking at, I've already described. We're obviously looking hard at what's happening with demand. And what we see the same thing other people see, which is a strong economy, which really put up quite a performance in 2023. We see good evidence and good reason to believe that growth will come in lower next year. And you see what the forecasts are. I think the median growth, median participant wrote down 1.4% growth, but we'll have to see.
I mean, that's not
really
really
hard to predict.
affected by Delta
We'll also
very
be looking
much.
to see progress on inflation and the labor market remaining strong, but ideally without.
I don't have any like
large
other
increase in unemployment
other put
that
positioning.
happens sometimes.
I just have like Vegas shit.
When you begin the cutting cycle, will it be essentially run the same way
I picked
you
up
do
some
it
shit
now
for the
with,
end of the month
raising
today,
rates,
but
where
that's
you
not really longer
basically do
dated.
trial and error,
Those are
cut and
spreads.
see what happens, or will you tie it to some particular measure of progress?
We haven't typically tried to articulate, with one exception, a really specific target levels, which was, some of you will remember the thresholds that we used in, I guess, 2013. The answer is, these are things that we haven't, really worked out yet. We're sort of just at the beginning of that discussion.
Thank you, Mr. Chairman. Edward Lawrence of Fox Business. So if the Fed cuts rates, as the dot plot is showing, about 75 basis points, does that signal or that there's a belief of weakness next year in the economy?
It wouldn't, if that were, first of all, let me just say, that isn't a plan. That's just accumulating what people wrote down. So that's not something, this, but allow me to say it again. We don't debate or discuss what the right, whose SEP is right. We just say what they are and we tabulate them and publish them. So it's important for people to know that. But it wouldn't need to be a sign of, it could just be a sign that the economy is normalizing and it doesn't need the tight policy. It depends on, the economy can evolve in many different ways, right? So.
What are you going to eat for dinner? I don't know.
It could be more what I just described.
And you focused on core inflation. We've heard from in other meetings. How sticky
really
is core inflation right now?
Well, that's what we're finding out, and we've seen real progress in core inflation. It has been sticky, and famously the
fuck do
service
you mean?
sector
It's still at
is thought
4%.
to be stickier, but we've actually seen reasonable progress in non-housing services, which was the area where you would expect to see less progress. We are seeing some progress there, though. In fact, all three of the categories of core are now contributing. Goods, housing services, non-housing services, they're all contributing at different levels, meeting by meeting, or rather report by report. So, yeah.
Okay, let's go to Katerina.
Katerina Saraiva, Bloomberg News. Thanks for taking our questions. I just wanted to ask a little bit about, we had some pretty positive data this morning and yesterday. I'm assuming those were not incorporated into the forecasts we see today. But I just wanted to ask, how that kind of adds to your thinking, on the inflation outlook.
Right. So we got CPI the morning of the first day, and we got PPI the next day, which informs the, translation into PCE. So it's very, very late in the game, but nonetheless, participants are allowed to, encouraged to update their SEP forecasts until probably mid-morning today. After that, so staff has to accumulate all of that and create the documents that you see. So until about mid-morning, maybe late morning, it's okay to update. And I believe some people did update their forecasts based on what we saw today.
Okay, and do you see, I mean, how are you, when you think about, starting to think about the rate cuts next year or whenever they come, how do you think about the economy we're in now, kind of post-pandemic? Do you think that there's been significant structural shifts, and is that going to change how you look at a rate cut path?
The question of whether there have been fundamental structural shifts is really hard to know the answer, and a very interesting one right now. The one that would affect, one that comes to mind, though, is just the question of where the neutral rate of interest is. And so, for example, if it's risen, and I'm not saying that it has, but if it were to have risen, that would mean that interest rates would need to be a little bit higher to convey the same level of restriction. The thing is, we're not really going to know that. People will be writing papers about that.
The situation right now with stocks running is it's just like the rising tide lifts all boats, right?
We're going to be making policy in this.
So don't read into them all so much individually. I'm not going to answer questions about 70 stocks that are positive,
said,
right?
You know the natural rate of interest by its works.
Fucking ES and NQ are up 133 basis points, and Russell's up 400.
Operates with a lag, so. It's one of the reasons why we slowed down this year. We started slowing down at this meeting last year, reducing the pace at which we were adding restriction. And over the course of this year, we really slowed down a lot to give those lags time to work. In terms of demand, has demand shifted more away from services into goods? You can make a case for that the shift back into services has not been complete.
What's the rising tide mean for Beyond? Probably not much, because there's not a lot of covering tomorrow.
They temporarily don't want any more stuff. They haven't got any place to put it.
Good for today, maybe?
Go to Jennifer.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. You said back in July that you needed to start cutting rates before getting to 2% inflation. As you mentioned, PCE inflation is now running at 3.5% on core. On a 6-month annual basis, core PCE is running at 2.5%. Though when you look at super core and shelter, they are, of course, stickier. So in looking at the different components of the data, how much closer do you have to get to 2% before you consider cutting rates?
I mean, the reason you wouldn't wait to get to 2% to cut rates is that policy would be too late. I mean, you'd want to be reducing restriction on the economy well before 2%, because before you get to 2%, so you don't overshoot. If we think of restrictive policy as weighing on economic activity, it takes a while for policy to get into the economy, affect economic activity, and affect inflation. So I can't give you a precise answer, but if you look at what's in the SEP, and I think you'll see a reasonable estimate of the time lags and things like that it would take.
Do you think below 3% would be reasonable?
I wouldn't want to identify any one precise point, because I would be able to look back then and probably find out that it turned out not to be right. But we'll be looking at it and looking at the broad collection of factors.
Hi, Chair Powell, Jean Young with Market News. Wanted to go back to
double my
stickiness
port simply
of
by having a
inflation
straddle.
question.
Nice, man.
Over the past
well done.
couple of years,
5,500 end of day. No, probably a pullback. This is way overblown.
Getting inflation back down to 2%. Yet it's also been surprising how fast inflation has come down this year.
What's Gamma Max on GME? I have no idea.
Do you think something has changed in our understanding of inflation?
There's not like any shorts to cover there,
something
though.
different about the U.S. economy?
I think this, we felt since the beginning that it would be a combination of two factors. The first factor is just the unwinding of what happened in the pandemic, the distortions to supply and demand. And the second thing would be our policy.
GM's
which was weighing
19 on
higher demand and
GMA.
actually making it easier for
So
the supply side
way
to
the fuck
recover
out of the
because
money.
lower demand. We thought those two things were going to be necessary. Sorry, say the last part of your question again.
If there was something different about the U.S. economy.
Yeah, so it's not that, it may or may not be about the U.S.
Yen's
economy
about
being
to
different.
short
I think that
squeeze.
this inflation was not the classic
Yeah.
demand overload,
Fuck.
pot boiling over kind of inflation that we think about. It was a combination of very strong demand, without question, and unusual supply side restrictions, both on the goods side but also on the
IWM
labor
went
side,
over
because we had a
Gamma Max. That's an
participation shock.
ETF.
So this is just very unusual. And, we had the view, my colleagues and I broadly had the view that
And I'm
we
pretty
could
sure
get
we
a
don't
lot
track RUT,
of-
right?
You had essentially a vertical supply curve, because
Well, RUT wouldn't matter, but we
you
don't track
ran into the
RTY.
limits of capacity at very low levels because there weren't workers and because people couldn't, the supply chains were all broken. So we had the view that you could come straight down that vertical supply curve to the extent demand reduced, and something like that has happened.
Stop's got my calls, but
The
puts are
question
free
is,
now. Nice.
you
Yeah,
know,
I'm just going over the situation
once,
I'm in, I
once
think.
that part of it runs out, and we think it has a ways to run, we definitely think that the sort of supply chain and shortages side has some ways to run. Does labor force participation have much more to run? It might. Immigration could help, but it may be that at some point you.
What does it mean for SPX if yen is short
And then
squeezing?
it gets down to
It's
demand,
not good.
and it gets harder. That's very
That's,
possible. But
systemic
to
risk.
say with certainty that the last mile is going to be different, I'd be reluctant to suggest that we have any certainty around that. We just don't know. I mean, inflation keeps coming down. The labor market keeps getting back into balance. And, it's so far so good, although we kind of assume that it will get harder from here, but so far it hasn't.
Okay, we'll go to Megan for the last question.
Hi, Chair Powell. Thanks for taking our questions. Megan Casella with Barron's. I want to ask about the balance sheet, given the Fed's focus now on proceeding carefully and considering rate cuts. And can you talk us through what the latest thinking is, and has there been any consideration of altering the pace of quantitative tightening at all?
We're not talking about altering the pace of QT right now, just to get that out of the way. So balance sheet seems to be working pretty much as expected. What we've been seeing is, that we're allowing runoff each month. That's adding up. I think we're close to 1.2 trillion now. That's showing up. The reverse repo facility has been coming down quickly, and reserves have been either moving up or, as a result, or holding steady. At a certain point, there won't be any more to come out of, or there'll be a level where the reverse repo facility levels out, and at that point, reserves will start to come down. We still have, that we intend to reduce our securities holders until we judge that the quantity of reserve balances has reached a level somewhat above that consistent with ample reserves. And we also intend to slow and then stop the decline in size of the balance sheet when reserve balances are somewhat above the level judged to be consistent with ample reserves. We're not at those levels. With reserves close to $3.5 trillion. We don't think we're at those reserves. There isn't a lot of evidence of that. We're watching it carefully, and so far it's working pretty much as expected, we think.
Adjusting that thinking at all by the time you're considering or moving forward with rate cuts? Is that time to rethink, or are you still going to follow that thinking?
So I think they're on independent tracks. So you're asking, though, the question, I guess you're implying the question of can you continue with QT at such time, QT, which is a tightening action, at such time as policy is still tight? And the answer is it depends on the reason. If you're cutting rates because you're going back to normal, that's one thing. If you're cutting them because the economy is really weak, so you can imagine you have to know what the reason is to know whether it would be appropriate to do those two things at the same time. Thanks very much.
No, but your broker's probably adjusting SPY for the dividend. If you look at like SPX or ES, the prior high was much higher. Well, that's interesting. The bond market's fucking just blowing up right now. I would say either bonds are already squeezing or they're gonna start. USD JPY is down 170 BPS and getting pretty close to levels that are extremely important, like 140. So this is interesting. I mean, SPX is obviously a little overblown, breaking through gamma max on the weekly. This is causing a lot of things to run, especially R2K moving up really hard. And that, you know, that's on the back of potential easing, right? That, you know, small caps become far more attractive because they're far more hurt by tightening financial conditions, which apparently we're never going to have. Let's see here. Hold on, there was something I wanted to look for specifically. So SPX W 677.78. So yeah, we're still about $20 above gamma max on the weekly contract. This is all happening quite fast right now. Are we seeing a black swan? It could turn into one. This is a lot of change and risk, right? I don't think bond markets were as prepared. I don't think bond markets are properly prepared for any actual easing, and now they're pricing in far more than the Fed's even projecting. There's still a very significant short on U.S. Treasuries. Like a big short position. I don't really know how that's going to play out. Obviously, it's just, we just know it's there. It's pressured. Bonds are actually ripping. Bears are so funny. You'll find out. Was this time for bear FOMO? Plenty of time to contain the risk. No, I don't see any reason to be overzealous. We're still well above gamma neutral. Bond market's squeezing because they think we aren't going to see any more rate increases, and this will be the last getting it while the getting's good. Yeah. I mean, that's part of it. What bond fund to monitor? TLT. TLT is ripping. No, I'm no intention of rolling Vega. I mean, Vega plays are intentionally chosen because they're exposure to volatility, not delta. Just imagine shorting bonds and yen. Why did JPOD do this to us? Good question. Well, bond shorts have been getting out for the last few weeks, so hopefully they were prepared for this. If they weren't, there's going to be liquidity issues. I mean, positionally, I don't think much is going to change. Charm will obviously be higher now, especially if we stay in this range. I'm not really sure we're going to stay in this range for very long. Maybe a little bit longer, and then it'll probably moderate a little bit. You guys are insane. Every stock is ripping. That's because all the indexes just ripped. Jog time. Plus, I got to pick up SCIP. Hopefully back around 345. All right. See you in a bit, Torque. So equities will dump and everyone will pile into the bond markets. Well, everyone is piling into the bond markets, which is, yeah, not great for equities, is from a liquidity standpoint. It's a good Vega number to say it's a Vega play or not. Depends what instrument you're using. Like a lot. Like usually on, SPX, I try to get, a multiplier of like at least one. On SPY, 0.25 or 0.3. FedWatch thinks 375, 400 by December 2024. I mean, provided this doesn't create systemic risk somewhere, right? Either through yen or, which it might, through yen or squeezing of U.S. Treasuries. If there is no systemic risk created from today's speech, which there very well could be, then I would say that we'll just see the asset bubble reinflate and inflation rise again. Yeah, I know gold's ripping. I'm still confused how less rate cuts than expected equals more up. I mean, it doesn't really, right? I mean, they just said that they project growth to slow over the next 3 years, dramatically from this year, right? They're projecting like 1.6 to 1.8 versus this year's like 2.5. So they're expecting a significant decline in growth. This is just bullshit, literally. Like it's just people pumping indexes. It has very little to do with like valuations or anything like that. How did they keep beyond under the dollar figure you identified in your X post? Because they want to? They don't want it to squeeze. If you were short beyond right now, you wouldn't want it to squeeze either. Are you hedging the upside for SLD? I mean, I'm hedged. I had a straddle. I'm pretty sure I'm stopped. Yeah, I'm stopped out of it. I'm pretty good. Covered. I mean, I covered all my costs on a $60 move to the upside. Straddle was pretty awesome today. And that's, by the way, why I held it through the Fed meeting. For anybody that was asking me why I was doing that earlier. So about the whole collapse without a catalyst thing. Could still happen. Vol really isn't down very much. And it could pick up rapidly if we start falling. So... also, you have increased volatility into expiration as well, which is the factor that me and Jay Fresh were talking about last night, and that the excessive amount of gamma and the effect of Vana on that gamma could close the market makers' need to hedge that spread into this Friday's expiry, regardless of the effect of charm flows. Kudos to your continued education you've given us all over the years. I feel like I've got a pretty good grasp on bond equities market over the last year because of your explanations. Nice, man. Buying puts here? I have some. I mean, I just have like some debit spreads like 30 days out. If it doesn't fall into my target range, I'm not too worried about it. The spread on it already minimizes losses. Honestly, I just think that we see the asset bubble continue to grow. Inflation rises again, and then we get a new scenario for rates. Then we see issues in a couple months. I mean, at this rate, it won't be a couple months. Financial conditions have eased tremendously. There's already banks offering like 5-6% rates. I mean, obviously they're not borrowing that money from the Fed, but they're trying to lend as much as feasibly possible, right? And that can drive the housing market right back up. And then we just get the whole thing all over again, but worse. So I mean, all that'll do is just force J-Pow to stay with the rates longer, and then they'll move the dot plot out. NVIDIA getting clapped. 218% ports today. Thanks, man. Nice, dude. Now I've got puts in the money for tomorrow. Well done. Did JPOW just put a lot more pressure on Yuda for the 1218? Yes and no. I mean, yen's rising, which is good for Japan. They would prefer the stronger currency. However, the bond situation's not great for them. So we'll see how they approach it. I mean, our inflation's still going to be exported to them, and their inflation is rising quite rapidly. Also, a weaker dollar is super bullish for oil, right? So if the dollar drops, I mean, oil's already moving, right? But oil's going to get more expensive right away. Like a weak dollar is going to be expensive oil. And if oil moves up hard, don't forget that we still have OPEC cuts. They just did a new one. They've been cutting like crazy. And the oil market so far for the last 8 weeks kind of just ignored all that. The dollar dropping could change that very quickly. Killed it today. You're the man. Well done, Ben. Congratulations, dude. How low could we drop end of day, you think? I mean, I'd be comfortable targeting Gamma Max, but it could fall below that, frankly. Because now you're going to get profit taking on, like, everything that fucking... everything everyone bought running up, right? Let's see. I would say 77 is about where Gamma Max was, and it may have moved up through the intraday. I don't know how much it would have moved up, but right now we're getting some call buying. Not a lot of longer dated positioning above 45.75. Looks like 46.95s where interest is peaked, and we've got profit taking at pretty much every strike up to that point. So continued profit taking could see us fall quite a bit, I suppose. Back below 75, maybe? Let me check something else here. That doesn't look super bullish. Oh, I have VIX up twice. 1 second. Let's talk about GM for SPX, WSPX. What's the difference between the weekly and monthly? So the monthly tends to have significantly more leverage than the weekly. Like monthly contracts on the SPX carry vastly more weight in capital than the SPXW contracts do. However, SPXW contracts are more important kind of intraday, shorter term, because they tend to carry more gamma. So all your delta is out on the monthly, and all your gammas a lot of your gammas in the weekly. This week obviously is an OPEX, so we're approaching one of those big monthly contracts, so the gamma in both begins to pick up. And charm. This seems like hubris to me. The market is telling me that the U.S. will be the only economy to dodge even a mild recession, and it was the only one that printed the most money by far. I don't think we're dodging any recessions, but definitely some hubris. Definitely a little too much party a little too soon. But you know, the market will weigh it out over time. So we're condemned to another month of upside drift? Not necessarily. Just wait for all the vol and the crazy shit to play out and see where things shake out. I mean, you've got treasury markets practically squeezing right now. You've got currency pairs collapsing. There's a lot of shit going on. Gold's up 2%, silver's up 4%, wheat's up 3.5%, oil's up 140 BPS. VIX futures are up 14%. Wait, is that right? Oh, that's the roll, right? It fucking rolled. You guys, here's your problem. You focus on price for your long-term plays and not your data and your evidence, right? And then you focus on your data and your evidence for short-term plays and not the price. Oh, clip that. Clip what? Did you reposition your Tesla puts? No, but I might buy some more. If it goes back under 130, 230. That's gonna get spicy. 102.99. We need a pickle jar fear indicator so I know when to inverse. Let's clear market manipulation and get everyone banned from trading. And saying that, I think Sally Mae puts for late December look tasty. Does Carl still play Tesla? I have no idea. Clip the part where you tell me how much you love me. All right, let's see. We got about 30 minutes left in the day. I don't know if we're gonna have enough time to get more call side capitulation. Maybe. It does look kind of bearish. Puts at 90. Cheap as fuck. Holy shit. $12 for tomorrow. Tomorrow's Thursday. Bank of England and EU decisions in the morning. B of E could raise. $30, $35. You know what I'm gonna do? I'm gonna buy an 85 for today. Let's see what happens. That's cheap, right? Yeah. It's $1? I'll buy 2. Oop, that was the wrong account. Crap. Oh, okay. I still have a trade left. $24. Then tomorrow's expiration. Give me 1 second. 10 2-year spread is interesting. Yeah, it is. All right, so a little support at 46.90 for tomorrow, but not much below that. Little interest at 710 and 4700. Then kind of a big gap, and then looks like sold calls above 4700. 25, 30, 50. Yeah, those are sold. Probably closed between 46.90 and 4700 today, but if we get another round of sell-offs, we might not. The 0 DTEs kind of support a close that would be lower. Yeah, if 0 DTEs keep selling off, we could see 75.80, which would be back below Gamma Max. So that's kind of what I'm fucking around with here. Would you buy? It's just some 85s for fun. See what it does. I do like that June we're running into XRT dividend this week and rebalance, reconstruction. There's like no shorts left though. XRT is liquid as fuck. Oh god no, I hate that shit. It makes me throw up. BMG. What happened to the upstart? Is this thing just gonna keep ripping? It can move up to like 46 right now. Anything beyond that would require a lot more call buying to come in. But yeah, it can move up to like 46. One thing we haven't brought up lately is the backstop that ends this coming March. Do you have any comments on how that could affect the current situation? Or am I trying to make too much out of what it is? I mean, if he doesn't continue it, it could drive a lot of fear, right? Banks have been, I mean, even in this most recent rally, banks have been leaning on it for liquidity, right? So, I mean, if the Fed feels that banks should be self-supportive at that point and no longer need that extra lending window, then they could pull it back, and that could be a big deal. Could definitely drive a lot of volatility, if nothing else. So no, I don't think you're overthinking it. I think it's a big deal, but it's still, you know, a few months out. Dad, Fubo's squirting. It's doing okay. Russell's actually running like fucking crazy right now, so I would expect that most of them would be doing all right. Even Tup's at $2. However, that doesn't mean this is gonna last. big moves like this tend to encourage a lot of profit taking. Ooh, Beyond's breaking back above GN. Can I sell one against this? There we go. So 20 minutes. Fix kind of ticking up a little bit. A lot of 46.95 0 DT call buying. No support under 95 though. Change to tomorrow's expiration. I guess how many calls come in here at the money to support the stability in the price. I just got back. Would you say we stay up here for a while? I think about closing 4,600 call credit spreads for Jan. Call credit? I don't know how long we're gonna stay up here. I mean, the market's still super overbought. Beyond rejected. Not a lot of positioning changes for tomorrow yet. So most of the buying coming in just at the 46.95 for today. It's a bit unstable. I guess 4,700 is getting a bit of buying too. Nat Gamma. Pause on rate hikes? They didn't. Well, I mean, they paused, but they've been pausing for months now. They didn't say they're not going to ever hike again. What's even more surprising is that we're going up despite the fact that the market had already factored in too many rate cuts, and now it's actually factoring in even more. Now it's factoring in what, like 6, 7 cuts, according to the Fed now? Because the 2 p.m. spike, or your best idea, the projection that the Fed would cut rates. The Fed's terminal rate for 2024 moved from 5.1 to 4.6. And even though participants were pretty split across those numbers, that's still some easing into the end of 2024. And then since then, the Fed fund futures have just run wild with that and decided that the Fed's going to cut even more rather than less. No bears, or just overwhelmed? There were definitely some bears. There were puts. I mean, they closed. I mean, part of the reason we probably saw so much upside was puts getting stopped out. What breaks now? Yen, U.S. Treasuries, or vol? I know. USD JPY is still moving pretty hard. Nothing will tighten financial conditions quite like financial conditions actually being realized. Treasuries have been disconnected for quite a while now. It's true. Yeah. Alvin K, thank you so much, man. Happy holidays to you too. See if yen squeezes and starts off the credit crisis. I don't know, U.S. Treasury shorts might do that all on their own. Gold is fucking rocketing, so silver. And oil's already almost back to 70. It's at 69.69. Hmm. If the bond market squeezes, should one sell the top or hold on to bond holdings? It's up to you. I mean, obviously, you can capture profits earlier on them. They may go up even more as rates get cut, right? I guess largely that'll depend on the duration you're holding. So if UTA doesn't do anything next week, could we just float up here until the next meeting? Potentially, yeah. I messed with yen a while ago. The squeezing has, I mean, it hasn't moved that much yet. It's starting to move quite a bit, but there's a lot more room for it to go. Is there a way to get leverage on it? Yeah, you can get yen futures. You can get, there's FXY, which is like a yen exchange rate ETF. There's YCL, which is like a leveraged yen ETF. What's the bear case moving forward? Are we full bull into Q1? I still think there's mechanical reasons that the price can fall between now and like next week. I mean, like all of this has an effect, but I don't think any of this is actually bullish. Like growth for next year is still projected down. Companies are all way overvalued. Again, you guys are conflating price. You're conflating price with data. They're not the same. Was J-Powell hawkish, dovish, neutral? Neutral. He stood his ground on you know, points where, you know, they were trying to push him towards more dovish answers. But overall he did come off as optimistic. But I would say he managed to hold onto neutral, at least. He wasn't too bad. He wasn't as fucking awful as he was last time when he got all excited about inflation turning into productivity. And that'll loop back, but I still think 46.50 end of week for SLD. That doesn't seem unreasonable. Ooh, I wonder if we actually lose 95 here. That could be a big deal. Not a lot of support below there. That's a huge level to lose. If that sells off, we'll dump. Nine minutes? Do you have the MOC? That's an AVGO price. Way too high. Probably. I wouldn't chase things that have already been posted to Wall Street Bets as game porn. Not bullish, but still risk on. The risk is definitely still on. But Gherk, we have to get that Santa rally. It's not Christmas yet. Santa rallies are bullshit. There's no like statistical evidence that seasonality or Santa rallies actually matter. Dish squeeze coming? Oh god, that stock's garbage. I'm starting to feel more like when data and price finally align, it will be without much warning, insofar as when it will actually matter to markets. Possibly true. Why can't we see a good old SLD? Well, we might. I mean, SLD just started today. It goes through Monday. Does the current situation have similarities to 08 and the derivatives are pushing the market beyond fundamental valuation? Yes. Also, the carry trade's collapsing. Which the selling of assets to satisfy the collapse in the carry trade was one of the primary drivers of the undervaluation that fed into like in the MBS market, that fed into like Lehman and Bear Stearns collapse. So that's earlier about USD JPY price action. You explained perfectly, but I still see a lot of people screaming UEDA. Am I confused, or should you explain more for possible short JPY squeeze? Yen is... So as much leverage as is in the carry trade, all of that leverage is short yen, right? As part of that carry. So yen rising triggers covering. And you know that pushes yen higher up. Like I said, like the carry trade collapse, I think is inevitable regardless of what else happens in the market. There's no way to avoid it. Either JPOW collapses it over time, or UDA pushes from the other side, or they both push towards the center together. It will break down. And if rates are still high on the US side as that happens, you know, that's going to tighten financial conditions dramatically. Have you sold credit spreads at these highs? I sold a few earlier, like 47, 25, 50. I didn't want to sell too many because obviously things are very uncertain at these prices. Why doesn't IBKR allow me to buy FXY calls? I have no idea. Mr. Jayhawks, welcome to Dillionaire. Thank you so much, dude. Hit me up on the Discord, I'll get you added to the country club.
Happy birthday, Gherkin.
Appreciate it.
Yeah.
We don't have a Powell, Eiffel Towering the yen shorts.
Get the cash in advance because we hold in the float. If you are what you eat, that makes Gherkin the go. Hoping that you read the DD.
Late to say thanks, Garrett. I beat Kenny. You rock. Cheers. Congratulations, man. I have FXY calls on IB. Well, yeah, you should be able to buy them. I don't understand. Tasty trade is PCO? Oh, interesting. I don't know. Yo, but we ain't no cult. Sorry. Oh well. Good time to buy Palantir puts? What an odd choice of thing to short when everything is ripping. Not particularly. It's above resistance right now. It didn't move up very much with everything else, but short vol's pretty well entrenched there. We're leading into a squeeze of short yen. What does that do when the yen is gaining strength? Genuine curiosity. I've written about this. You can look it up. The dollar will go down, first of all, right? They have an inverse. They would have an inverse relationship in that scenario. Japanese credit spreads would widen, which would probably push U.S. credit spreads to widen as well. Oil would go up, especially as dollar went down. It would really depend on how much it squoze. The trade's been leaned on pretty hard for the last couple years, but it's breaking down very, very quickly today. VIX 1 14.2, spot VIX 12.23. Oil now up 175, Dixie down 89 BPS. Down against the yuan. USD JPY under 143 now. 2-year down 600 BPS. Jesus fuck. That's gonna get wild. Ding ding. Something is gonna break before Christmas at this rate. Maybe, maybe not. We will find out. Sorry. All right, so ES closing at 47.0925 on the December contract. That puts us, I think, about $80 short of the prior high. Yeah, $80 short of the all-time high. And above the prior high from July of this year. Let's see. SPX broke up into a higher range and closed above Gamma Max on the weekly, but we're still about $40 shy of Gamma Max on the monthly contract. It's a pretty significant move up. I don't know if that's going to be very sustainable. The last time we broke above Gamma Max, it wasn't. I mean, Gamma Max is going to move up a little bit tonight, but it may not move up that much, and we're likely to fall back below it. It's very hard to support positioning above Gamma Max because you have to have constant buying, otherwise it falls off, which adds just another layer of complexity to the hedge that's already positive Vega. Gold is back above 2,000, up 223 BPS. Silver up 447. There's definitely currency concerns there. The only thing that really ever moves gold that hard is banks. Oil's up 178 BPS. Indexes, ES 141, NQ 125, Dow 147, and Russell 475. I'm going to take a look at broad commodities. Kind of turned around a little bit today with a 50 BPS gain. Obviously, yields currently at their lowest level since August of this year. So all of the tightening that had occurred from August till September, now gone. I think we're pretty much in a place where we could see the asset bubble begin to reinflate, much as we did in June and July. And that may be something that continues to carry prices upward over the next month, alongside Charm. Core 3-month and 1 month both fell, but not as much as you would expect. Volatility actually on indexes stayed relatively high today, given the insane price increases, and that's probably because we saw volatility fall in the underlyings, that it was actually so stable. But you know, still very, very close to September's lows for both of those. The U.S. carry trade today moved from a high of, so the swap, this is like a synthetic swap on the carry trade, moved from like 723% down to 674%. It's continuing to drop, and after hours it's below September's low already. And we go out to the weekly. This is a pretty significant move down. Pretty close to October 22's high right now, and that may continue to drop. Obviously, when it nears the bottom, things get very, very bearish, but it's got a long way to go. This could accelerate pretty rapidly, or it could be, stabilized at some point, and that'll depend on U.S. rate decisions and JPY rate decisions. But we do have a bit of a blowout on the forward return for volatility that dropped pretty strongly today, down to negative 14%. Obviously, as the yield curve moved closer to uninverting. We have the 2-year U.S. Treasury down negative 6.17. So 617 basis points, or like 29 points. The 5-year down 25. The 10-year down 18, 20-year down almost 15, 30 down 13 points. And we're even seeing some of the front month move down, with the the 6 month's still not pricing in any rate cuts, by the way. And that would cover March, but the 6 month at the federal funds rate at 5.33. So not pricing in any rate increases at all at this point. This kind of, the 2-year already kind of looks like it's getting out of control. 4.44 is not below the Fed's expectation, but it's quite low, and that's a huge move up in valuations for these. So we'll keep an eye on yields overnight. Euro and Bank of England, Eurozone and Bank of England both have their policy rate decisions before market open tomorrow. Those could also have dramatic effects on dollar valuation, especially if Bank of England moves forward with another rate increase, which they might. Their inflation's at like 5.7% or something crazy. So it's definitely not out of the realm of possibility that Bank of England continues raising rates. And that could put further pressure on the dollar. So keep that in mind. I put some bad idea tonight. I want to fill port. It's better just to confirm, right? Especially when things are so up in the air and you don't know what's gonna happen. It's better just to step back, wait, and make plan your decisions, right? Don't just fucking YOLO into puts because you feel like the market's too high, because then the market will go higher. I'm investing in Doge in order to afford food next year. You think it'll beat inflation? Why does it feel bad to be bullish here? Because there's no reason to be. It's irrational, right? Irrational exuberance. Nothing's gonna beat inflation. Well, that might actually be true. Oh, yeah. You want to look at Fubo and beyond. What kind of copium do you need? What the fuck is wrong with all of you people? Fubo got a little bit of covering today, and then they fucking shorted it into close. Upstart also got a little bit of covering, and they shorted it into close. Upstart's already above Gamma Max again, so obviously they benefit probably the most out of a lot of the stocks we watch from planned rate cuts in a stable environment, but they really benefit from a stable credit environment, one that isn't fluctuating, and the idea that financial conditions are actually going to loosen is kind of comical. So this probably isn't going to persist. However, I wouldn't short it, not yet. GME is still plenty liquid. I wouldn't say that it's been shorted very hard in ETFs at all. Still kind of running around the chain on the few calls that are left open by bag holders. But I don't think it's going to run or anything like that. It doesn't look very interesting. Siri moved out pretty hard into the end of the day today. No crossover in the liquidity there, but it's looking like there might be some covering. I still don't know what the fuck's going on with that merger. I need to look into that more, because I'm not sure how it's going to affect short positions or the liquidity of those short positions. Top closed above $2. They're still shorting it, which is funny. That still may not run until after OPEX, though. Remember that a lot of these really, they'd prefer to run with the ETF rebalancing after OPEX occurs, Beyond included. Beyond, failed to break above, here, let me move this to where Gamma neutral is, which is, it's kind of fucking close enough, right? Beyond closed below Gamma neutral again. That might move up today. actually kind of more bullish if we see gamma neutral move up above delta neutral. There's still no significant forced covering on this tomorrow. So even though it had like a nice rally into the end of the day and the market helped support its levels, the forced covering for tomorrow is only like 70,000 shares again, so they could easily bring the price right back down to like that 950 range. I wouldn't get too excited about it yet, but there is a lot of forced covering next week. And it might matter a lot more there. Will mass layoffs and overall poverty help inflation? I mean, it'll help bring inflation down. Where would bears want to see this open? What? Beyond? Under gamma neutral? They don't want it crossing gamma neutral because the market maker starts to defend their shorting, right? So they have to short even harder. You have to use up a lot more liquidity to short when the market maker is buying the downside. Upside price target for FUBA is not. It hasn't started like running yet, so I don't really have one. It's 350, and then it gets rejected again if they short it more. I mean, the shorts there have been able to stay. They're able to stave off of like a 400 basis point move in Russell. I think they'll be okay. I don't think they're gonna get like squeezed out or anything. SPX not beyond. Oh, where would bears want to see this open? I mean, under 4650, I suppose. If they're gonna sell securities for SLD, I mean, we're definitely at a high, right? Like, this would be a good time to do it. Thanks, Dad. Again, we all appreciate you. No problem. Thank you guys so much for tuning in. I will see you guys bright and early tomorrow morning. Have a good night, everybody. Later.
Kenny's Mayonnaise is a proud sponsor of Pickle Financial, so when you get a hankering for some creamy, delicious mayo after a long night of snorting, sweating, and pacing, grab some Kenny's.